Good morning, ladies and gentlemen, esteemed guests, dignitaries on the dais, and dear participants. A very warm and heartfelt welcome to all of you on this special occasion on today's event, Regional Awareness Workshop on Unified Pension Scheme. The purpose of this workshop is to provide you with a comprehensive understanding of the benefits of the scheme and an opportunity to secure your financial future. We are confident that by the end of this session, you will be equipped with all necessary information to make a well-informed decision that will shape your retirement for the better. Thank you, and let's begin. Let's start with the welcome address. I would like to invite Sri Sangeet Kumar S., Director of Accounts, Postal Kerala Circle, to deliver the welcome address and formally greet the gathering. Welcome you, sir.
A very warm good morning to all dignitaries and participants present here. It is my opportunity to welcome each one of you to this workshop, which is going to give an immense knowledge on this new scheme of the government, which is going to be beneficial for most of us. And it is something which we had been looking forward to, which we were yearning for. And at this juncture, when we are having so many doubts in our minds, we are glad that we have subject experts, domain experts, who are going to enlighten us on the crucial aspects of this new scheme. First of all, I would like to welcome our dear leader, Chief Postmaster General, Shri J.T. Venkateshwarlu sir, whose high energy and dedication sets an epitome for all of us to emulate. Welcome, sir. It's also my privilege to welcome our dear Senior DDG PAF, a very approachable leader, and sir has always been our pillar of support through all thick and thin. Welcome, sir. We have with us our DPS headquarters, who has been our friend, philosopher, and guide in all our issues and working matters. We also have Director Accounts, Shri Saurabh Deshmukh. He is the backbone of the accounts wing, looking after the crucial section, which is providing us with the important data, which is helping us to take a data-driven decision making. Welcome, Saurabh. We also have amongst us Shri Surjit Karthikeyan sir, Director from DFS. He is a domain expert in economics, and the whole issue of money, pension, and everything, as we all know, stems from economics, and sir is here to address us. Welcome, sir. We also have with us Shri Guneet Singh Anand. He is the Assistant Manager of PFRDA. He is here to enlighten us on the key features and the latest developments with respect to the UPS scheme. Welcome, Mr. Guneet. And we also have with us Shri Pranav Kapadia, who is the Assistant Manager of CRA Protein, so who is going to enlighten us on the technical presentations and the functionalities of UPS, which is going to be a step-by-step guide for us to make a switch from the current system to the futuristic one. Welcome, Mr. Pranav. Last but not the least, I'm also welcoming each one of the participants of the workshop who are present here physically and who is also joining us online. We are the beneficiaries of this workshop, including me. And I hope that we all will have an active participation. Whichever doubt that is arising in your mind, there is enough scope for you to raise them. I hope that your active participation will make this workshop a thumping success. Thank you.
Thank you, sir. We are honored to have Sri Saurabh M. Deshmukh, the Director of Accounts, with us today. And now I welcome you, sir, to deliver the opening address.
Good morning, all. Respected CPMG sir, Senior DDG sir, Sujit Karthikeyan sir, Director DFS, then my batchmate Sangeet Kumar, DPS headquarters sir Alex George sir, and from PFRDA, Gurneet Anand Singh and Pranav Kapadia ji from Protean. First of all, let me first thank the CPMG sir and the DPS headquarter and DAP for organizing such a good workshop at such a short notice. We have been tasked by DFS to conduct 4 regional workshops in span of less than 10 days, starting from the last week of the August till 10th of September, to go to the people, to go to the employees and explain about the unified pension scheme. Majoritarily, in the NPS, we had an uncertainty. With UPS coming as unified pension scheme, we have a fixed guaranteed pension by the government. That is also on a contributory basis. So it's a hybrid of OPS and old pension scheme and new pension, national pension scheme. So the major reason to conduct this workshop is to generate awareness. Since the last date is fast approaching, the 30th of September is the last date. So our aim, our focus with the collaboration of PFRD and Protean to approach the beneficiaries of the UPS who are getting proper information to have make a decision. It's a one-time decision that person has to take, whether he wants to stay in NPS or want to opt for UPS. Once opted for UPS, the person still has the option to go back to NPS. But still, till now, the unilateral option is only once till 30th of September. So our main focus is to reach out maximum number of people either in person or either in online mode and answer their questions, answer their doubts to the maximum extent so that they have an informed decision making. Another thing is also to reach out to the recent pensioners who have retired from the NPS. That is, this scheme is 100% beneficial to these pensioners. So we have Department of Post is the leading, it has been praised by the Secretary DFS also. We are the leading ones to reach out to the pensioners. We have activated all our DDOs. We have reached to the 90% of the retirees who could they have opted for, because it's a very beneficial for the retirees. So even 10%, because we cannot afford to leave even a single person, because in NPS people were getting very meager pension, 700, 800 rupees, 1000 rupees pension. So anything, any eligible retiree will benefit from this, because they don't have to return back the benefits received under the NPS. So my urge to all the DDOs is to reach out to every single pensioner that they know, because our country is so far flung and our department is so far flung. There might be people in very far accessed areas where we even don't know. So our request is to the authorities here is to reach out to all the eligible pensioners and get them. We even have timely conversion requests also have been with the DDOs and with the PEOs. Our 85% plus requests have been processed. This is also a remarkable achievement since looking at our workforce. But still, we are still short of 15%. And within the time frame limit, we should be able to give that option conversions. So once again, thank you for participating in such a large numbers, both offline and online. Please feel free to ask all your questions, all your doubts. We'll have more focus on the question answers rather than having unilateral, because information all of you have, since the rules have also been notified, UPS rules have also been notified. We request all your questions to be coming up, since your questions might be also the questions of others. So please don't hesitate. Please feel free to make this session a participative one. Thank you so much.
Thank you, sir. Next, I would like to invite Sri Surjit Karthikeyan, Director, Department of Financial Services, to deliver a special address.
Respected Chief Guest Sri Rajiv Kumar sir, CPMG sir, Venkateshwara sir, Sri Sangeet, Sri Saurav, Sri Guneet Singh, Assistant Manager PFRDA, Assistant Manager CRA Protean Pranav Kapadia. So it is indeed pleasure to be in this particular session, that too at Trivandrum, because my native place is at Cherthala, so I am a native of Kerala. So first of all, in coordination with the Department of Post, so out of 4 departments comprise about more than two-thirds of the central government employees: Home Affairs, Railways, Defense, and Post. So it comprises total there are 24 lakh central government employees. Out of that, more than two-thirds is shared by these 4 departments. So we had been since the UPS launched in April, we had been in contact with all the departments of department ministries of Government of India, and so we had meeting from the starting from April. We had meeting with financial advisors of all the departments, because financial advisors are key, because DDOs and POs report to them, finally report to them. So a lot of applications were pending with the DDOs, POs in the initially, because it is a starting. Whenever we launch a new scheme, so there was a troubleshooting hota hai. So that might be the reason it was slightly pending. After that, pendency has reduced to a great extent. And Department of Post, as Sri Saurav suggested, that you had been very, out of all the ministries department, your performance has been very good, in particular with regard to past retirees and pending applications. So, so we had after that financial advisors meeting, our Secretary Department of Financial Service had meeting with all the departments. Then separately we had meeting with all the ministries to understand whether all are aware of this particular scheme, Unified Pension Scheme. So around 12 ministries told that okay, they need some sort of a doubt clearing session. So the link which is circulated for this Department of Post meetings, it is being circulated to all that 12 departments also. So we had 4 workshops. We had 4 meetings actually: Mumbai, Guwahati, Kolkata, Chandigarh till date. And the Department of Post was first to come out of that particular 4 departments. And this is the final workshop here. So this UPS notification, it came into existence in January, and after that March, PFRDA had launched a detailed guidelines of the scheme. And like any other central government scheme, like generally there are so many schemes of central government. If you take Ministry of Finance scheme like Adal Pension Yojana, PMSBY, PMJJBY. So we have regular reviews and awareness program soon after the approval of cabinet. Any particular scheme, either after approval of EFC or cabinet, then we have meetings as well as awareness programs. But in the case of this unified pension and new pensions scheme, we usually, it is for central government employees, so we have to take an initiative. So even though August we have started detailed intensive awareness, otherwise PFRDA had been doing lot of awareness activities, giving advertisement in newspapers, and all these activities are taking place. But then now, since we are now after this Department of Post workshop, we have Ministry of Home Affairs workshop. So their central government employees are around 8 lakh. Compared to Ministry of Department of Post, it is around 1,50,000. And so recently, Department of Pensioners and Pensioners Welfare has introduced rules, Unified Pension Scheme rules. So it gives details about what is the rules with respect to voluntary retirement, technical resignation, superannuation removal, and all those things. It was released recently 2-3 days back. So PFRDA would be giving a detailed presentation. So I may be taking 5 or 10 minutes more, because few points I thought I would cover, which PFRDA will not be covering. Like 1993. Okay, 1993, there was an option for government employees to choose between contributory provident fund and pension. So like NPS, contributory provident fund, at that time it was giving good returns. So hardly few people opted for pension. So after around 7 years, pension became more attractive because lot of matlab, revisions happened in that pension scheme and pension became more attractive. So I am comparing that particular situation to the present situation where NPS, we are thinking that, okay, we are getting 9.5 returns, compound annual growth rate of 9.5 returns till date. And we hope that, okay, it will be giving good returns at later point of time, in enormous corpus at some point of time. So, but then we don't know, it may be subject, our pension, this UPS may be subject to further improvements because since launch of the scheme, so many improvements have happened, like switch from UPS to NPS before 1 year before retirement or 3 months before superannuation. Now VRS is include, what happens to technical resignation, if you are shifting from central government to autonomous bodies, what is the, so all those details are there. Like NPS, even though it was introduced in 2004, its rules came into existence in 2021. But UPS, soon after introduction, now UPS rules is also there. Then another component, so details of the particular scheme he will be delivering, so I am not going deep into that. Dearness relief is one of the key component of this UPS. So average 12 months basic pay plus DR so there are 3-4 components of this unified pension scheme, like lump sum payment every completed 6 months, 10% of the every completed 6 months it will be added. So if you have 25 years of service, 50 years will be added, plus 1/10 of the dearness allowance plus basic pay. In addition to that, DR is linked, family payout is there, all those options are there. So there has been a question on whether we would be shifting to old pension scheme at a future point of time and this thing. So let me apprise you. See, globally, for pension there is an international organization of pension supervisors. Like banking, there is a banking committee of banking supervision. So the pension regulators, banking regulators, insurance regulators, they have to adhere to the conditions globally. So OECD countries are the countries which are at the highest pension. There are a lot of pensioners in that particular OECD countries. So they have shifted to some sort of a UPS-like setup. But it is difficult for them to shift to OPS, even though there are so many pensioners there. If they shift to OPS, then it will be fiscally unsustainable. So India had introduced this UPS at this point of time, thanks that this type of option is there. So let us take this opportunity, because at a later point of time, if good returns are there, because the only difference is that in NPS, 14% government contribution is there, UPS only 10% government contribution is there. So maybe at the end of 60 years, okay, your corpus would be high, and annuity service providers, but annuity service providers are giving only 6.5% return. So that is also a challenge. If you compare like that, okay, now you feel that, okay, NPS is better, but then dearness relief component is there, lump sum payment is there, assured pension of 10,000 rupees is there. So whenever DR changes, it get automatically. And suppose at 60 years of age, you could withdraw 60% of the corpus, like NPS, 60%, but at 20 your pension will get reduced. So if it is but one demerit, there is one disadvantage for unified pension scheme, like there is only spouse will get pension. So that is that is a particular disadvantage of the scheme that I am just openly revealing, so that that maybe, I don't know whether it may be subject to change in future. That is one of the only demerit of the scheme. So if you are at 60 years of age, if you feel that you will need to withdraw 60%, then you can either overcome that situation, or you can shift to NPS at that point of time. There is a switch option. So in India, Reserve Bank of India had conducted a study, whether pension for the sustainable pension, what should be the government had asked Reserve Bank to conduct a study that all the pension scheme, whether bringing about all the pension scheme, whether it is sustainable. So they had told that it will be 4 times costlier than NPS. So UPS is something between OPS and NPS. And NPS now, as I suggested, initially in the beginning around 12% returns were there. It has reduced to 9.5. Compound annual growth rate is 9.5. And India is in a developing country. Maybe after 10 years, I don't know how much interest rate, because for the developed countries, interest rates are 2 to 3%. And during the COVID time, it has gone to 1% negative interest rate in developed countries. So we don't know, India is developing, fast developing. So maybe after 10 years, we don't know what would be the rate of interest. So in that case, UPS is slightly advantageous. And past retirees is another component. Like 25,000, there are 25,000 past retirees that retired either before on or before 31st March 2025. So they can avail the benefits of UPS. So nothing they will lose, even though they had withdrawn 60%, nothing they are going to lose. They will get lump sum payment every completed 6 months into basic plus DA, 1/10 of basic plus DA. That if they will get around 6 lakh or 5 lakh, something they will get on an average. Then DR linked, it is DR linked, pension, pension payout is there, pension is there, so automatically that, anyway it will be much better than this annuity payment. So all those top-ups they would get. So I request, once again request, to reach out. I understand that, okay, Department of Post had already 90%, Sri Deshmukh was mentioning. But I request to reach out to everybody. And you are the key role for making awareness of this particular scheme, because all the new employees and all that, they will come to you either to submit physical application or online application. So these all additional features, why we are conducting this workshop, because in order to make you DDOs and POs aware of the scheme, so that you could ask all those employees to join the scheme. And 30th September is the last date, because anyway 6 months time has been given. UPS rules has also been out. Tax benefit is another advantage. Whatever NPS tax benefit, UPS is there. Plus lump sum withdrawal, that particular every completed 6 months, that is also tax free. And suppose you are investing in equity or other than default option, that is also 60% tax free. Death gratuity and retirement gratuity. Okay. So if you are availing UPS, you will get all the other leave encashment, gratuity, everything you would get. And suppose during the service, if one passes away, then you can automatically shift to OPS. Or you can continue in UPS. There is an option like NPS. This is also an option there. We just introduced it 3 months back. And PFRD had been making wide publicity for this scheme since its launch. Like for past retirees, they had given advertisement, newspaper, social media platform. Everywhere they are doing whatever they could do. And each and every day they are working on this particular scheme to further improve the scheme. They are physically traveling to almost, I think more than 100 workshop has been conducted online by them. But in addition to that, now we are conducting physical workshop, because in order to ensure that, okay, you people all are aware. And my colleague from CRA is also there. So I am grateful for them also for attending this workshop. And I request them to just smoothen the implication of whatever changes in the regulation or rules you have to update in the software of this UPS software, UPS NPS software, whatever changes, especially with regard to VRS and other 20 years VRS issue. So with that, anyway, you can ask questions after the PFRDA presentation. He will give you a detailed presentation. And thank you very much for this, for arranging this workshop, and Trivandrum CPMG sir and all the officers here, all the officers, staffs here. Sincerely grateful. Thank you.
Thank you, sir, for that insightful overview. We are incredibly honored to welcome Sri J.T. Venkateshwarlu, Chief Postmaster General, Kerala Circle, to deliver the inaugural address.
Sri Rajiv Ji, Senior DDG PAF from New Delhi. Sri Saurabh, Director Accounts from Postal Directorate. And Sri Sujit, the Director DFS. And Sri Gunit Ji, Assistant Manager from PFRDA. And Pranav from Assistant Manager for CRA Protein. My colleagues, DPS Headquarters, DAP, and all attendees here. Very warm welcome to all of you. I take this opportunity once again to welcome Sri Rajiv Ji to this beautiful city. State, and of course he had been earlier here. So now, as dwelt upon by our Director Accounts, Sri Saurabh Ji, and extensively by Sri Surjit, DFS, who is handling the subject, as all of us are aware, UPS is the in thing now actually. In fact, I am getting enticed whether I should also, if option is given, I mean. So as touched upon, no, UPS, as I am given to understand that actually it is one option to the NPS who are under NPS, one-time option to switch over to UPS. It also provides a hedging concept for us in the sense then people who are averse to market risk and all that can definitely think about it. Definitely people at the after 50s, I am given to understand that after above 50 and all that who are after mid-career employment, then they should definitely think about this because a lot of advantages are there. In fact, government is promoting this in a big way. The last date is fast approaching. They say awareness is the first step towards action. That's why this workshop is being conducted. So Kerala Circle is very happy to organize this regional awareness workshop for South Zone. And there are many benefits like I am also an NPS contributor. Like though I am under old pension scheme, from day one I am contributing to the NPS. In fact, I have got 10 lakhs plus in the NPS. I periodically watch once in 15 days, 20 days at that range. So it was even 10 plus. Now it has come down the NPS XARR, but still UPS lot of advantages are there as they have mentioned actually because maybe people below 35 should think because longevity risk, market risk and all that they can accommodate. So for them may not be much useful, but those definitely above 40s and definitely above 50s and definitely above 50 people who are at the age of 55, 56 and who are about to retire and all that, definitely my sincere advice is that you just weigh the advantages of the UPS and NPS and then definitely should switch over. Because as I have been mentioning you, there are many good features of the scheme people don't comprehend and all that. So that's why these workshops provide a platform for all of us to get our doubts cleared and all that. So UPS definitely appears to be a better option after hearing the Sujit's. I mean, he has already provided panoramic view of international things also on availing pension and all that OECD countries and all that. So UPS appears to be definitely a better option, no doubt about it. Definitely for people after mid-career employment and all that, people who are above 40s and all that. I mean, it's a layman's thing because that's what I could comprehend in the last 20-25 minutes. So please don't hesitate. Don't think that this is a one-way thing and all that. It's a wonderful opportunity for all of us to get and broaden our horizons on the concept of UPS. So I once again take the opportunity to thank Synergy PAF for choosing Kerala Circle and also my team here to facilitate this workshop. Unfortunately, I am having another VC member technology, so I have to rush back. Otherwise, I would have continued to, I am thinking to stay back and get benefited from this workshop. So once again, thanks to JNPF and Director Accounts, Directorate Sangeet and my senior AO who have taken this initiative to organize this workshop in Trivandrum and hope that this workshop is going to be a fruitful one and definitely broaden our horizons on UPS. Once again, thank you for giving me this opportunity. Thank you all.
Thank you, sir. We are profoundly honored to have us with today our chief guest, Sri Rajiv Kumar, Senior DDG PAF, and we now request you to deliver the keynote address. Welcome you, sir.
Our guests Surjit, Guneet and Pranav and colleagues. Already many things have been told and you have to judge. We are approaching the D-date, 30th September. Earlier it was in June. Perhaps in June, na? So 30th June was postponed for 30th September and already many things have been told. What are the main concerns? You can ask them, the three persons and Saurav. I will get my pension. I will not be in a disadvantageous position, whether I am in NPS or UPS. My pension will continue and I can switch off if anything in future occurs disadvantage to our interest. These 3-4 principles you should be guided by. What should we adopt? And UPS, as is the key word, assured payout for government employees. First time Government of India has come in this new pension scheme or national pension scheme things that assured pension should be given. What was the main criteria for old pension scheme? Assured pension. Only thing was that your spouse will get after your death and something else. But other advantages have been added to this category that offsets the disadvantage also. So you will be knowing in due course, in workshop, all things about it. I hope this workshop will generate awareness and had faith in the system that is going to work now onwards. Okay? Thank you all to come and participate in this. Thank you.
Thank you, sir, for your inspiring words. We will now move on to the heart of our event. Now, to provide us with an in-depth understanding of its operational framework, we have with us representatives from the very body that regulates and oversees its implementation. It's my immense pleasure to welcome Sri Guneet Singh Anand, Assistant Manager, PFRDA, an esteemed officer from PFRD, to give us a comprehensive introduction to UPS covering its key features and latest developments. We look forward to his valuable insights. We welcome you, sir.
Good morning, respected Senior DDG sir, CPMG sir, Director Department of Post, Director DFS, and all the colleagues present here from Department of Post. So basically, I'll be taking you through the features and benefits under UPS and all the recent developments that has happened in the UPS. So what I would like to say, or rather encourage you all, is that whatever queries you are having regarding anything, even if I have discussed it and if you are not clear about that, so kindly after my presentation, please ask them. Please, what I want is that when we go away from here, when we go to our respective offices, and when someone comes to us to discuss about UPS, so you are able to tell them the similar way that I am trying to tell, so that no one in your office is unaware about UPS, and they'll know the benefits and they will know the features, so then they can decide wisely whether which scheme to opt for. So I'll be starting with my presentation. So can we move to the next slide? No slide changer is there? It's not it. So I'll be starting here. So basically we'll start why UPS came into picture. So you might have heard that under NPS, in some instances the pension amount was very meager, like around 2,000, 3,000 to that levels. Now it may not be due to fact that it may be due to the fact that that particular subscriber under NPS might have had a very small period or small time under spent a very small time under NPS and he retired, due to which his corpus could not get invested properly in a for a long period of time, and it could not accumulate enough funds so to provide a proper good adequate pension. So these kind of issues, they were common, and also the inflation indexation, that is the DNS relief or DNS allowance that the government servants they get that. So that that was not a feature of NPS. There was no type of annuity that used to provide a inflation linked pension basically. So whatever the amount that you were getting at the starting of your retirement, that is 60, so that used to be fixed for throughout your lifetime. So suppose if you are getting 20,000, 30,000, whatever amount, so that 20,000 will be fixed throughout your lifetime. But we all know that, you know, due to inflation and rising cost of living, that amount would become inadequate in future date, and our retirement, you know, the quality of life post retirement would have suffered due to that. So these were all the demands from the government employees also, and the government then took care of it by bringing in UPS. So in UPS they provided a inflation linked assured pension. So another thing was in that NPS, you are not aware that what pension you will get at the time of your retirement. You cannot say. It was all dependent on the market. So whatever the corpus you accumulated in NPS, at the age of 60, it would be then reinvested into annuities, and that annuity is basically your pension. So whatever the market rates prevailing at that time, that would determine your pension. But under UPS, the government has now given a guarantee that you will get 50% of your last 12-month basic salary. Whatever the basic salary you were having in the last 12 months of before retirement, 50% of that is being guaranteed by the government, and along with that, dearness relief is also being guaranteed. So now the tension that the anxiety that people used to have about knowing the pension amount in advance, so now that is gone, because in many workshops for NPS when you used to go, so people used to just ask what pension I will get. So even we did not have any answer, because it was all dependent on the market, on the date you retire and how the markets are performing on that day, particular day. The pension was dependent on that. But now under UPS you can say that yes, you will be getting a assured pension of the 50% of your basic pay, the average basic pay of your last 12-month salary before retirement. So that is the thing. So this is why UPS was brought into picture, and many changes have also recently come in the scheme. So we'll be going through each one of them. Can we move to next slide, please? Because this is not working. So this slide basically I discussed. One of the factor is the adequacy, one of the factor is the protection against inflation, protection against the longevity risk. We are, as a nation, we are developing our average age that we are surviving, the life expectancy, that is also increasing, and life expectancy post 60, that is at the 60 years of age. So that is also increasing due to better medical facilities and everything. So we are expected to live longer. So for that also our pension needs to be linked with inflation. So that is there, and a predictable pension. So these were the main reasons the UPS was brought into picture. Now we'll go step by step, that for whom it will be applicable, and how you can apply, and what are the major features and benefits, and what are the recent developments. So next slide please. Next slide please. Next slide. So for whom basically UPS is applicable? So all the employees who have joined the services post 1st January 2004 and were covered under NPS. So for them you have an option to migrate to UPS. So that option is available till 30th September. And all the new employees who are joining the services after that is post 1st April 2025, that is post the implementation of the scheme. So they also have an option, and for them they will have an option either to go in NPS or to choose UPS, and they have to exercise this option within 1 month from the joining of the services. And all the past retirees, those who have retired under NPS before 31st March 2025, so they are also having an option to avail the benefits of the UPS. So these are basically the 3 categories of employee for whom UPS is applicable. Next slide please. So how you can avail, how you can enroll under UPS. So for a new joinee will get an option. So either he can go with NPS, so for that he will have to fill the CSRF form, or he has an option to directly join UPS by filling the A1 form. So this option is there. For the existing employees, so they have to fill the A2 form. And for the past retirees, there are forms B1, B series forms. So for that, B2, B3, B4, B6, so these forms are there. So for that they will have to fill the respective form, whichever is applicable to them, and they will be getting the UPS benefit. Now, important here is that if you don't exercise this option within the prescribed timelines, then you will never get an option to come to UPS. So it is very important. Now one-way switch has come, wherein, you know, if you are in UPS, you will get a one-way option to switch back to NPS. So if you have joined UPS, you will get an option to switch back to NPS. We will see in what cases that options will be given. And but if you don't join, you will not have any such option to switch to UPS in a further date if you don't join within the prescribed timelines. So that is very important. And another thing, when you join basically the UPS, your whatever the corpus that was due to your central government services, that corpus will be transferred to the UPS individual corpus, and then from that that will be taken as your individual corpus, and a mirror corpus or benchmark corpus will be calculated at the CRA end, and you'll based on that you will be getting your the payouts under UPS. So one-way switch. Next slide. So recently, this is a big change that has come. Earlier, what was happening was that once you join UPS, you did not have an option to revert back to NPS. So it was a one-way option that if you join UPS, you will be in UPS forever. But now, in the recent OM also and in the UPS rules also, this option has been provided to the UPS subscriber, that they will have a choice. They will have an option to revert back to NPS. And when they revert back to NPS, they will be getting all the 4% differential. That is, you know that under UPS, you have a 10% and 10% contribution. That is 10% of the contribution from the employee side, 10% contribution from the employer, that is government side. But under NPS, you used to have 10 and 14% contribution, 10% from the employee and 14% from the employer. So once, if you are under UPS and you exercise an option to switch back to NPS, you exercise this option, you will get that differential 4% corpus also, along with whatever the interest or growth has been there for that particular period you were in which you were under UPS. So that also you will be getting. And now when this option will be provided to you, anytime before 59 years of your age, that is 1 year before superannuation, 12 months before superannuation, you will be having this option. Or suppose if you are taking a VRS, so you will be having this option before 3 months of that deemed date of retirement under VRS. And if you are retired under 56J, so then also you will have that option at that moment that you can, you know, switch back to NPS. And if you are resigning from the service, so before 3 months of your resignation, you can exercise this option. So this option will basically is now giving you more flexibility. Like, you know, under NPS, when you used to go, we used to talk about the flexibilities that were available under NPS. So now the same flexibility has been extended to you, that you can any time switch back to NPS along with whatever the consequential effects were there, that is that 4% differential corpus. You can any time switch back. So now this particular option should remove all the anxieties that which scheme to opt for, because you always have an option now to switch back, to come back to NPS. If you feel at any date after joining UPS that, you know, no, NPS was better for me, I would have you know be at a more better condition when I was in NPS. So you have this option, you switch back to NPS, you will get all the difference, contribution and the growth thereon, the returns thereon, and you can, just as a NPS subscriber, you can be back. So nothing will impact you if you exercise this option. So, you know, in a way, this option has made UPS a NPS plus kind of scheme. So you have this option, so you can switch back at any moment of time. And what also this option has provided you is that it has given you a more flexibility to, you know, decide about how your pensions will play out when you are actually near the retirement. You don't have to make a choice now. One choice you have to make, that you will have to move to UPS to get this option. Otherwise, you will always stay in NPS and you will never have an option to come to UPS. So that choice you will have to definitely make. But which scheme is better for you, UPS or NPS? That you can now delay that decision to the 12 months before your superannuation date. So that decision you can delay, and at that time you will be in a better position also to take a decision whether UPS is better for you or NPS is better, because at that time you will actually know what your family conditions are, how your children, they have settled, not settled, and what is the status of the your spouse and everything, what your health condition is, and all those things you will be in a better position to take an informed decision at that time. And if you feel that at that time you have, suppose, dependent children, so UPS does not have an option for pension to children, to spouse. So but at that time you will have this option. If you have a dependent children and if you want to pass on the pension benefits to your children, you will have that option to switch back to NPS at that time. But suppose your children are well settled, they don't need your pension, they are working in a very good company, or they are owning a business and they are well off. So then you will not need that option to pass on that wealth. They may not need it. So at that time you should continue to stay in UPS, because under UPS you will get many benefits like assured payout, guaranteed payout, and DR will be covered, DNS allowance will be there, and lump sum payment. So that all options you will be getting. So basically, due to this switch option, you will be more informed at that time at the time of nearing your retirement, to make an informed choice. So that's why I would like, why I'm again and again emphasizing on this option, is because it is very important. It is very important that this message should go around to your colleagues also, those who are not present here, and your juniors, your subordinates, everyone, so that they can make an informed decision, and they can use this switch facility, so to revert back to NPS. So now basically what we should do as an individual. Earlier, see, when one used to ask from PFRDA that which scheme is better for us, UPS or NPS. So we used to say, sir, you will have to see your situation. You go to UPS calculator, you calculate which is giving you more benefits, and accordingly you decide. We cannot say for you that which scheme will be better. But now today I can definitely say that UPS will be better, because UPS is giving you flexibility to revert to NPS also. So you have that option, you have that flexibility with you, and it will be more beneficial for you if you switch to UPS. So now moving to next slide. Now what are the contributions under UPS? As I already discussed, that under UPS your contribution is 10% towards 10% by the government, that is employer, 10% by the employee, and a separate 8.5% will be given by the government directly to the pool corpus. So that 8.5% has nothing to do with the individual accounting of your
office or anything, and that contribution you don't have to remit. That the government will be directly remitting to the pool corpus as per the policy decisions, and it will be invested in the pool corpus. So that 8.5%, as a nodal officer, because we get lot of queries that how to account for 8.5% and how to give that 8.5%. So I'll clarify it here that that 8.5% has nothing to do with the nodal office POs, EDOs, PROs. So it will be given directly by the government, and what you have to do is you have to take care of the 10 and 10% of the corpus, and that 10 and 10% of the individual is being remitted to the system in a proper timeline that has been provided. That is, by 28th your salary should be ready, 25th you should upload the CSRF, and 31st or the last working day you should remit the contribution to the trustee bank. So that is important. And why this particular timeline you have to follow, it is important. The reason is that, see, the markets keep going up and down. So suppose if you delay the remitting part, if you don't remit the contribution of the individual in a timely manner, what will happen? Suppose on 31st, a particular NAV was 10 rupees, say. 10 rupees was the NAV. NAV is basically nothing. You can compare it with the share price. For simplicity, I am trying to explain. You can compare it with a share price. So if there was 10 rupees was NAV on 31st, and suppose market performed well on the next day, first or second, whatever. So the NAV got increased. Now you did not remit the contribution in a timely manner. Okay. So now, but when you remitted the contribution, at that time NAV was higher. From 10 it moved to 11. So now under NPS or under UPS, in individual's account, it is not the money or amount, it is always the units, like in mutual funds. So if
on a particular day, 10 rupees, as per 10 rupees NAV, you will be fetching 100 units. 1000 rupees is the total contribution if I take, and 10 rupees is the NAV. So an individual subscriber will be fetching with 100 units. But suppose if NAV increases, but the contribution remains same because that is dependent on the salary. So 1000 rupees contribution, but now NAV has moved to 11 rupees. Or let's say for simplicity, I'm taking it 20 rupees. Will not happen, but just for simplicity of the calculation. So that same person, he'll be getting 50% less units because NAV has moved. And now what will happen, he will come to you that, my colleague, you remitted his contribution timely and you did not remit my contribution timely. See, he is having 100 units, I am having only 50 units, and due to which my individual corpus is now being impacted. You pay for me. This provision has come in the UPS rule. Rule 8 as that was applicable in NPS, wherein, the head of office can fix the individual responsibility for these delays that are not attributable to the subscriber. So the head of office, your head of department, they can fix your individual responsibility for these delays. And in NPS, you might not have been processing or utilizing this rule, but in UPS definitely an individual will utilize this rule 8, because in UPS, if his individual corpus is less than benchmark corpus, his pension will get impacted. So he will definitely use this rule 8, and your head of office using this rule 8 will direct you to bear the difference loss to that particular subscriber along with whatever interest is there. And this loss will be borne out of your pocket, out of the nodal office pocket, because you were at that time you were at fault to remit the contribution in a delayed manner. So although for the Department of Post, most of the contributions are being remitted timely, but even if there is a 1 or 2 cases, and specifically for the UPS subscriber, I would request that kindly remit all the contribution as per the timelines provided. So this was important part, that's why I was focusing on it. So you can go through Rule 8 of the UPS rules, the CCS implementation of UPS under NPS rules 2025 that has been notified on the 2nd of September. So we'll share also a copy with the head office so that they can circulate it to you. And as a nodal office, this was important. And for subscriber also, it was important that his contributions are being remitted in a timely manner. Now, talking about the investment choice that are available to the UPS subscriber. So all the investment choice that was applicable to NPS subscriber of the central government, the same choices have been provided for the UPS also. So he can choose to invest his corpus in the following investment choice, like LC50 is allowed, LC25 is allowed, the government 100, G100, that choice is allowed, and default pattern is also allowed. So why this choice has been extended? In UPS there is concept of two corpus basically, individual corpus and benchmark corpus. Benchmark corpus is not a real corpus, it is a mirror corpus, it is just a accounting entry or ledger entry you can say. It will not have any impact, it is not a real money there. But what benchmark corpus is, suppose if you are remitting your contribution in a timely manner, if you are not taking any partial withdrawal, if you are not taking any other withdrawals and every activity, and if you are invested as per the default pattern. So suppose if your corpus would fetch you 100 or 200 units in that way. So that is the benchmark corpus. But now choices have been given to you to invest your corpus as per your will, and also you have been allowed for partial withdrawal. So these two things are there, and maybe at times the contribution may get delayed. So these three things. So this will impact your individual corpus in a way that if you have, suppose if you have taken a investment choice, LC50 you have taken. So there the investment in equity is higher. So obviously if equity investment is higher, you are bound to get more returns. In default pattern, the exposure of equity is up to 25%. In the LC50, the exposure of equity is up to 50%. So if you are taking a higher equity option, obviously your corpus will perform better, it will give you more returns. That is the in general case. So if it will give you more returns, then your individual corpus will be greater than benchmark corpus. And if your individual corpus is greater than benchmark corpus, then under UPS, whatever the amount that is greater, that is the higher amount in the individual corpus, that is returned to you. Suppose I'll take an example, if your individual corpus is 1 crore 20 lakhs, and your benchmark corpus as per default pattern is coming 1 crore. So that 20 lakh rupees, that will given to you as a one-time payment under UPS. So government will not take that money. It will give it to you only. So that's why you know, by being a smart investor or, you know, being a aware citizen, you can take more benefits out of UPS. So that's why these options have been given to you. And in cases also, you know, there may be some cases where you have taken out some money from your corpus and now your individual corpus is showing lower than benchmark. So in that case, what will happen? In that case, whatever the payout you were supposed to get in under UPS, it will be reduced proportionately. Suppose your benchmark corpus is 1 crore and your individual corpus is 98 lakh rupees, then the pension amount in that cases will not be 50% of the basic. It will reduce to 49%. Proportionately, it will reduce because 2 lakh rupees you would have withdrawn as a partial withdrawal. So that's why the payout under UPS will reduce proportionately. So that is the concept of the individual corpus and benchmark corpus and the investment choices that I have discussed. Now we can move to next slide. So now who will be eligible to get the benefits under UPS? See, for getting the benefits under UPS, you will have to have a minimum 10 years of qualifying service at the time of retirement. So when you superannuate, at that time you should have at least 10 years of service. Then you will be eligible for getting the benefits of UPS. Then if you are retiring under FR 56 or under special voluntary retirement scheme, then also you are eligible to get the UPS benefits and you will get the payouts from the same date that you are retiring. Then under, if you are taking, you know, voluntary retirement after minimum 20 years of service, earlier it was 25 years. Now you are being provided an option to take VRS at 20 years with UPS benefit. So this has come in the UPS rules. So that 25 years has now been reduced to 20 years. So for that cases also, for VRS cases also, after 20 years of service, you will be eligible to get UPS benefit. But in this case, the payout shall start from the deemed date of superannuation. That is when you turn 60. The payout shall start, but other benefits of the UPS, that will be given to you at the same date. So we will discuss about the other benefits and there also I'll again clarify it, what all benefits in which cases you will get. Then if you are being removed or dismissed from the services, or if you have resigned from the services without utilizing the switch option that we discussed earlier, then what will you get? So in that case, the UPS benefit will not be applicable to you. And whatever the individual corpus that you have accumulated, the 10 and 10% and the growth thereon, that will be returned to you as a lump sum payment. One-time payment, it will be given to you. And then you will not be applicable for any other benefit. So earlier this benefit was also not available. Now this has been provided in rules that in case you are not getting a UPS benefit, then your corpus will be returned as a lump sum. So if you are compulsory, if you are removed from the service or dismissed from the service, or you know, if you are resigning from the service without utilizing the switch option, one-time switch option, then whatever the corpus is there in your individual corpus, that will be given to you as a one-time payment. So that I think it has been now clear, because earlier people used to ask what will happen in these cases. So now this benefit has been provided. But you will not be getting then assured payout or any other UPS benefit. So that you must remember. And suppose if you are, you know, making a technical resignation after 10 years of service to join some PSU, state government, or any body where UPS is not applicable, not private body or government body where UPS is not applicable or available. So in that cases also, it will have a similar kind of treatment at, you know, with VRS basically. So you will get the assured payout when from the superannuation date. So that you will get. So this benefit is also being provided. Earlier it was also not available. So now this benefit is being made available. And other benefits like lump sum payment and final withdrawal, that you will get on the date of technical resignation itself. So these are the new benefits. And qualifying service, now what is the qualifying service? How is it calculated? So a detailed Regulation 13 of the PFRDA operationalization of UPS regulation is there, which deals with the qualifying service. It provides you these scenarios where, you know, qualifying service will be counted, will not be counted. So in a nutshell, if I would like to, you know, tell you about qualifying service, for whatever period under central government your contribution has come for UPS, that is counted as the qualifying service in a nutshell. But it may have some nitty-gritties, so you will have to look in the Regulation 13. So this is important for you as DDOs, POs, head of office, because you will have to certify this qualifying service at the time of exit. So then coming to next slide. So now what are the benefits? UPS benefits. What are the UPS benefits? So first and foremost is lump sum payment. This lump sum payment is in addition to the gratuity, in addition to the leave encashment, and in addition to all the other benefits that you are getting presently. Okay, so this is a new benefit that is being provided for UPS subscriber. And what is this lump sum payment? I'll try to explain with an example. Suppose at the time of retirement, the last month salary, your last month salary, that is basic plus DA, was 1 lakh rupees. Here we are including basic and DA both, was 1 lakh rupees. In that case, a lump sum payment will be given to you, and it will be calculated in the following manner. Like if you are having 30 years of qualifying service, 30 years, that means 60 completed 6 months of the service. So that 1 lakh multiplied by 60 multiplied by 1 by 10, that is 1/10 of your salary basically. So in a way you will be getting a 6 lakh rupees as a lump sum payment. Now this lump sum payment will be tax free, no tax on this payment. So it may depend at that time of whatever your salary is there. So in a nutshell, if you are having 30 years of qualifying service, you get a 6 months salary. If you have 25 years of qualifying service, you get 5 months salary, and so on. So that is the lump sum payment that is available under UPS. Now assured payout. Assured payout is what? 50% of your basic salary. Here we are not including DA because separately you will be getting DR. So 50% of your basic salary in the last 12 months, average of that basic salary of the last 12 months. Suppose if you are, again if you take 1 lakh rupees example, so 1 lakh is basic plus DA, so somewhere around 75,000 will be your, 70,000 will be your basic salary. So 50% of that, I am assuming that the last 12 month average remains same. So average 70,000 basic salary for the last 12 months, 50% of that, that is 35,000 rupees. You will be getting as assured payout, and whatever the applicable DR rate at that time will be there, you will be getting on this 35,000 rupees. So this is the assured payout benefit under UPS. So now you can say that you will have you know that you will have this amount of pension in your hand. For this, you have to have minimum qualifying service of 25 years. Now what happens if you don't have qualifying service of 25 years? If you have suppose 20 years of qualifying service, you joined at 40, retiring at 60. So then what will happen? So then this 35,000 will reduce proportionately, 20 by 25 multiplied by this 35,000. So that amount you will be getting, around 28,000 rupees you will be getting as a assured payout, and whatever the applicable DR on that. So this is the assured payout, and this if you are not having the minimum service, qualifying service, then that payout is not called assured payout. In that case it is called admissible or proportionate payout. And then in case, suppose, the chances are very unlikely, but in case your pension is not reaching 10,000 rupees, the assured payout is not reaching 10,000 rupees. So then whatever, if it is like 6,000, 7,000, whatever is there, then government is guaranteeing that we will at least give you 10,000 as a assured payout and whatever applicable DR on this 10,000 rupees. So at present I think DA is at 62%. So at present 10,000 plus 62% of that, that is 16,200. That is the minimum pension of today, as of today, that the government is assuring you. Then you have the option to withdraw also, final withdrawal also. Suppose if you have a 1 crore rupees corpus and you are supposed to get 35,000 plus DR as the assured payout. Now you have that option also that you can withdraw the corpus. You can withdraw 60% of your corpus, up to 60% of your corpus. That is, you can withdraw 60 lakh from your corpus. But if you withdraw that 60 lakh, your pension, that is that 35,000 rupees will also go down by 60%. So that you will have to see. So, and you will be getting DR on that on the reduced amount, that is the admissible payout. And you have the option of, you will get the excess amount if you have exercised the investment choice under UPS, and if due to any case you are having a higher individual corpus than benchmark corpus, then whatever the differential amount is there, that will be given to you as a one-time payment. That is IC greater than BC, whatever the amount is, excess amount is there, that will also be given to you as a one-time payment. So you have a lump sum payment, you have a one-time payment if you have excess amount in your individual corpus, you have assured payout, you have DR on assured payout, you have final withdrawal. So, and you have a family payout also, that is your legally wedded spouse. In case of an unfortunate death, your legally wedded spouse is eligible to get 60% of your whatever payout you were getting. the payout as well as DR, basically 60% of that, so that your spouse is eligible to get. But the condition here is that he must be your legally wedded spouse as on the date of superannuation. Now, what will happen in VRS cases? Suppose if you have taken VRS at 50, now you die, due to unfortunate accident or something, you are not there anymore. Then what will happen? Your legally wedded spouse starts to get pension immediately. Now they will not have to wait till your superannuation date and all that. So they will get pension immediately in the VRS cases. So this was also one of the concerns. So now this concern also has been addressed. So as you see in past 5-6 months, whatever the concern has come up, the government is proactively addressing. Sir is here from DFS. So every matter, every feedback is being taken care of, and you know the government is committed to make this scheme more user friendly, more subscriber friendly. So that's why I would say that you are getting an option to switch to UPS till 30th September only. After that, this option closes. If you have not switched to UPS, you will miss out and you will always be in NPS. And now you can see in 5-6 months, past 5-6 months itself, so many new changes, new benefits have been provided to UPS subscribers. And if you don't switch, you may miss out on the future benefits also if something comes. So that is why I would encourage you all that your staff members, whoever is eligible for UPS, they should definitely go for UPS, because you will be having one option to switch back to NPS at any point of time. So now you need not worry that which scheme is better for you. You always have an option in a future date that you can switch between schemes, but that is a one-way switch only. If you take UPS, then only you can switch to NPS. You will not have a reverse option that in a future date you can come from NPS to UPS. So that is why that option is only there till 30th September. I would again encourage you all that please exercise your option within the timeline that has been provided. And these timelines are not likely to extend as of now. So please exercise this option in a timely manner. Don't wait for the last day, because you know in last date the system might experience pressure. You might face system issues and you may miss out on exercising this option. So kindly, like in in ITR they say don't wait till last date. So also here I'll encourage that please don't wait till last date. You exercise this option. Today you have received this new information about UPS, new benefits that has come into picture, new features and all that. So today itself I would encourage you and your colleagues and your juniors, whomever you are in touch with, please inform them about these benefits and encourage them to exercise the option. Now, coming to the next slide, for past retirees, that is those who have retired before 31st March 2025, that is those who retired under NPS and they have purchased the annuity and everything. So for them what? How will they get the benefit? So for them, the benefits are similar. The only thing here is that because they have purchased an annuity, like they have purchased some annuity, they might be getting 10, 15, 20,000 pension from that annuity. And now, as per UPS, their pension will be calculated, and whatever the difference is there between the annuity amount and the pension amount, there is a representative annuity concept, but will not go into that much detail because that is not much of use. But you can rest assured, whatever the difference amount is there, that amount will be paid to that subscriber as a top-up payment every month. Suppose now under UPS, your admissible payout was coming out about to be 30,000 rupees, but annuity that you are getting is 15,000 rupees. So 30,000 rupees plus DR is your UPS benefit, but your NPS benefit was 15,000 rupees. So now what will happen? Whatever the amount, difference amount, that is 30,000 plus DR minus 15,000, whatever the amount is there as per representative annuity, that you will get as a monthly top-up from the government. So you will get the DR on the whole 30,000. So that is important here. So you will be getting that amount as a monthly payment, monthly top-up amount in your bank account every month. And you will continue to receive annuity, whatever annuity you have received. Suppose if you have purchased an annuity with return of purchase price, that is after your death, your children will get back the amount. So that annuity continues. No one is touching that annuity. You don't have to give anything to the government. This is an additional benefit that is being provided by the government to you. So you don't have to pay a single rupees to anyone to get these benefits, just fill the form B2, B6, B4, B6, whatever is applicable in your case, because there may be case the subscriber may have demised and the the spouse might be getting that annuity. So spouse will also get whatever the eligible benefits were to the subscriber. So whatever the applicable form is there, you fill that form, you will get these benefits. So what are the benefits here? Lump sum payment from the date of your retirement. So suppose someone has retired in 2020. So from 2020 till today, whatever the areas is on that lump sum payment, you will get along with the PPF interest. You will get the monthly top-up amount from 2020, whatever the areas is there. You will get, in case the family payout is applicable, then you will get family payout, the spouse will get family payout from your date of demise. And before that, whatever the benefits was accrued to you as a subscriber, that is monthly top-up. So that also spouse will get. Then dearness relief on this whole amount, whatever you are getting as a payout. Dearness relief you will get from 2020. So everything from backdated basically, including interest you will be getting as a one-time payment, and then post that, post you receive this one-time payment, you will start getting a monthly top-up in your bank account. So many of your subscribers, they might have retired under NPS. So I would request you all to kindly pass on this information to them, that they can avail additional benefits without paying a single rupees to anyone. They can avail the additional benefits under UPS, and whatever the annuity they have chosen, it will continue to be enforced. No one is touching your annuity. So it is, it is a win-win situation only for them if they take this, because they have to give nothing and they will get everything. So that is the case. So whoever in your organization who you are in touch with, who have already retired before 31st March, kindly encourage them to migrate, to opt this option of UPS, so that they can get the additional benefit at no cost. Next slide, please. Now, another new benefit that has come is in-service debt. Suppose a subscriber, UPS subscriber, they die during service, that is before superannuation. So what they will be getting an option to either be in UPS or to switch to OPS. In case you decide to switch to OPS, then what will happen? Whatever the contribution, employee contribution, that is 10% and the growth thereon, that will be given to your nominees as a one-time payment, and whoever is applicable to get OPS in your family, they will start getting the pension as per the old pension scheme, that is the CCS Extraordinary Pension Rules 2023 and CCS Pension Rule 2021. So that option is being provided here. And you can also stay in UPS as on date. The benefits have not been defined in UPS, but we are soon coming out with the amendments to our regulation, wherein we will also define the UPS benefit. So at this moment, I'll not like to say much on the UPS benefit in case of in-service debt, but definitely we'll come out with some good benefits in that also. Then the family or the subscriber has option to choose between either of the two, that is OPS benefit or UPS benefit. So then in case of invalidation also, similar treatment is being given. So in-service death or invalidation or disablement during service, so the option is being provided to you that you can choose either from the UPS benefit or from the OPS benefit. So, but this option you will have to exercise as soon as possible. Suppose if you have already migrated to UPS, so at that time, at time of your migration, this option might not have been applicable to you. So that this option you will have to fill the form 1 that has been provided in the CCS UPS rule, and you will have to submit it to your respective DDO. Whichever option you have to select, you select it, you submit to DDO. Suppose if you have not selected any option, and if you are having less than 15 years of service, then your default option is OPS. But if you are having more than 15 years of service, if you have already completed 15 years of service, then your default option is UPS. So kindly take care that do select this option. Whichever option you feel is good for you, go and select. The benefits that will be available under UPS will be coming out shortly with the amendments to the regulation, and you will come to know about the benefits in that case. So now next slide, please. Benefits in case of resignation, removal or dismissal from service. So as I discussed earlier, if you resign without opting this switch facility, then in that case, whatever the corpus, 10 and 10% corpus along with growth, will be given to you as a one-time payment, and it is settled. Then you will not get any UPS benefit. Or if you are dismissed or removed from service, then also in that case, the benefit that is available to you is that your individual corpus shall be returned to you as a one-time payment. Now, benefits in case of compulsory retirement as a penalty. So there is one compulsory retirement under FR 56 which is not a penalty, and there is a retirement which is a penalty, compulsory retirement as a penalty. So for compulsory retirement which is not a penalty, you get all the UPS benefit at applicable rates and from the same date of superannuation. But if you are in case of penalty, retiring as a penalty, compulsory retirement as a penalty, then your the officer, the authority who is supposed to sanction that penalty, they can decide that they can reduce your UPS benefit to by 1/3. That is, you will get a benefit in the range of 2/3 to 100%, whatever. So they may exercise this option, they may not. So in case you are retiring as a penalty, if you are supposed to get 50,000 rupees as payout, so it can be reduced by 1/3 by your whoever is your controlling authority. So that is in case of penalty, because this benefit also was not available earlier. Now this have been provided in the UPS rules. So this case also has been now dealt with. So you may see now that so much of clarity on every aspect of the UPS has come, and further some more clarity will also come with the regulations, the amendment to the regulations, and also if any further clarity government provides. Then taxation. So how is taxation under UPS? Earlier this was also not clear. So now what the case is that whatever final withdrawal you do up to 60%, that is tax free. Whatever lump sum payment you get under UPS, that is tax free. Partial withdrawal, tax free. Excess of the payment, that is your individual corpus over benchmark corpus, so that is also tax free up to 60%. Suppose you are having an excess of 10 lakh rupees, so 6 lakh rupees will be tax free. And payout, whatever the short payout, admissible payout you are getting, that will be taxed as per the income tax slab. And deductions, so same deductions that were applicable under NPS, that the same deductions are applicable under UPS. So under new regime, you get the deduction of 10% of your employer contribution, and under old regime you get both the deduction, the employee contribution as well as employer contribution. In that case, employer contribution is capped to 1.5 lakh rupees. So tax is also now, clarity is also now there. Next slide please. So this is just a comparative between the two schemes, UPS and NPS. So NPS was applicable from the 1st January 2004, and it was mandatory. You did not have any choice. But UPS, you have choice, either go for UPS or NPS. We have discussed already that UPS may be a beneficial choice for all of you. And then the switch facility, that is not available in case of NPS. So if you stay in NPS, then you will forever be in NPS. But if you opt for UPS before 30th September, you will be getting this switch facility also. And anytime you can switch back to NPS. Contribution amount we have already discussed. It was 10 and 14 under NPS. It is 10 and 10 under UPS, and 8.5% separate contribution towards the pool corpus. Then there was no guarantee under NPS. There is a guarantee, a short payout under UPS. And also the partial withdrawal remains same. You can withdraw 25% of your contribution 3 times in the service, in all your service period. Voluntary contribution also you can make to UPS. Taxation we have already discussed. Next slide please. Lump sum payment, there was no option of lump sum payment in NPS. So that we discussed, 6 lakh rupees example that you will get as a lump sum payment. That option is not there in NPS. That benefit is available under UPS only. A short payout not available in NPS. Then minimum payout. So there is no minimum payout under NPS. You may get pension between any range, 1,000 to 10,000 lakh, 10 lakh, whatever depending on your corpus and market performance. But under UPS, you have a guaranteed pension that is 50% of your large drawn 12-month basic pay, along with DR. So inflation indexation was not there in NPS. It is there in UPS through DR. And final withdrawal remains the same. You can withdraw 60% in both the cases. Then in-service death benefit also, it remains the same, that in case of in-service death, you can revert back to OPS, just as in that option was also there in NPS. And the annuity, the annual life certificate you had to submit under NPS, that you used to submit to the annuity service provider. But here in this case, you will be submitting it to the CRA, and I think soon we'll be linking the process with the Bhavishya portal also. So then instead of CRA, you will have to go through Bhavishya portal. So that is also in process. So next slide. I think the presentation is over now. So any queries, any doubts, any clarification you required, I would encourage you all that we can take some questions. So if anyone is having any question, you can ask. In fact, if you have any operational issues that you are facing, that also if you want to raise, you can raise here. Yes. See, partial withdrawal, suppose you have taken a 1 lakh rupees withdrawal today, and after 10 years, that value of 1 lakh rupees may increase to 2 lakh. So at the fag end, if you will pay, you will have to pay that means along with interest. That is only the, if you pay with interest, then no, then it will be equal. But if you, without interest, you pay only 1 lakh rupees, then your ICBC may face difference. So in a way, you have to pay with whatever the applicable interest is there. You will have to pay back with that. Applicable in the sense, whatever your benchmark corpus is giving returns, that is the applicable interest.
That is the default pattern?
Yes, default pattern returns. Yes, yes. It will be showing in the NPS app, in the app, the UPS app, you can see both the cases. What is your individual corpus and what is your benchmark corpus. So there will be a comparative that will be given to you in your account statement as well as in the UPS app. So you can always check. So if due to any case there is shortfall, you can, and if you have surplus money, you can replenish then and there. So that is the case.
And one more doubt, sir. Regarding this annuity payout.
Yes.
The person after death, his annuity will be repaid to the spouse. In case it is selected repayment option on death of the annuitant. 40% will be repaid. But in such case also, if he opts for UPS, will the spouse get the remaining 60%, 30% of the
40%?
pension? The 40% is returned to the annuitant,
Yeah,
returned to the spouse.
I'll delve more into that. See, there are multiple types of annuity available in the market. Under NPS, there are n number of annuities. Prominent one being the return of purchase price, without return of purchase price, joint life, family annuity, these 4 or 5 options. So whatever option you take under NPS, you get benefits according to that. But under UPS, it is that post your death, the legally wedded spouse is eligible to get the amount of 60%, whatever you were getting as a payout. So see, you have taken lump sum withdrawal, you have taken final withdrawal. In case you have not taken, that option will be given to your spouse. If in case, some death happens between the transition phase only itself. So then that option will be given to a spouse. Suppose you are already receiving a payout of rupees 1 lakh rupees admissible payout, you are already receiving. So in that case, after death, the spouse will get 60,000 rupees as a payout.
Okay, but that 40% will not be returned to the...
No, 40% will not be returned because once you retire, whatever your corpus is there after final withdrawal and everything, it is transferred to the pool corpus. Then it becomes part of the pool corpus. And whatever payout is being made, that is being made through the pool corpus. So pool corpus is a common corpus from which this pension is made. See, like in OPS, the guaranteed pension was paid from the revenue budget of the government. Okay, so but here that was paid from the budget. But here it is already being funded by the government. It is a prudent financial practice, and it is being paid through the pool corpus, which has already been invested. So once you are there, your spouse will get, and after that benefits end there.
Thank you.
Yes, ma'am.
So in the PPTs, you have mentioned that all the UPS benefits will be settled on the date of VR itself. But it is not mentioned anywhere in the PFRDA regulations or else in UPS rules released.
All the
before,
benefits
right?
like final withdrawal and lump sum payment, that
Okay.
will be settled on the date of VRS. The payout, the guaranteed payout by the government, that will commence from the 60 only. And it is mentioned in the regulation, like if you will go and read 14, regulation 14, lump sum payment, it deals with that. So there it has been clearly mentioned that in case of VRS, the lump sum payment will be given immediately. If you will read that regulation number 14, you will get. Similarly, for the final withdrawal, you can go and refer to the regulation 15.2. So there it has been mentioned that final withdrawal will be applicable on the date of that VRS or whatever the case may be.
So payout will not be there. And
Payout will not be there, only the
Payout will not
payout.
be
So
there in
60% you can take as a withdrawal, and also whatever lump sum payment according to the formula you are eligible, you can take on the date of VRS. But the eligible payout, or the assured payout or admissible payout, whatever is applicable, that will commence from the VRS date.
so it should be clearly mentioned somewhere.
That is also mentioned in the regulation, I think in the 13th where eligibility is mentioned, so there it is mentioned from
So
the
new
date of
PFRD
superannuation.
regulations are also been released as.
New, we are going through amendments, we are
You are
making
going to.
amendments, yes, because of these rules and new options and new benefits. So we are also amending, and wherever there was some lack of clarity also, we are providing clarity.
So and also there is an ambiguity between the designations, sir, between your slides and the UPS rulings. Actually, in your slides, you are telling like on resignation also, in resignation it will cease to apply in your
Yes,
slides.
yes, yes.
But in CCS UPS rules, payout will be given on resignations from the date of resignation itself. Payout will be there
No, that is for the technical resignation only.
only for technical
Ah,
resignations.
that
not
is
for
if you
a-
go from central government to state government or any government controlled bodies, that is called technical resignation. That is also after 10 years of qualifying service. And that too, you will not get a assured payout, you will get a proportionate payout depending on number of years of your service. So that is
So
only for the
it's only
technical
eligible for
resignation.
technical resignation.
Suppose you resign and go to private sector, then you will not get any assured payout of
Sir,
that.
right.
Yes.
Okay. And the nomination portion is also silent, sir.
Nomination. Nomination we are coming out in regulations. So nominations, whatever the criteria of nominations, we are coming out the detailed criteria of nomination in our regulations.
So it will be released. to us.
It will sooner or later it will come.
Sir, one more suggestion, that change of name changes and everything, right, sir? Name change.
I got your issue.
Sir, it should be delegated at the pay and accounts
Yes,
office
yes.
level. sir.
At present
so
it
that
is
we
at.
can clear the pendencies
Yes,
soon.
yes.
So for each and everything, we are relied only upon the principal AO or with the technical team, sir.
Yes.
So it should be delegated to the PAO level itself.
Okay,
Then
I'll
only
definitely
we can
take.
show progress.
This issue we have come across from lot of offices also. That, but the thing is, earlier when it was at the lower levels, then that facility was misused. That's why it has been to enhance the security for that purpose. It was being delegated to a more senior level. But name change issues, I think you are talking about the those who have already past retirees.
Past
Ah.
retirees name change issues.
So that is, see, there what is happening, the account was already closed in our systems also. And now to make changes to that account is not possible because it has already been closed and settled. So now definitely we have raised that issue to CRA, that to look into that issue and provide a feasible solution and easy solution to all. Because I know at present you will have to write it to CRA communication. We are aware of that issue. So we are working on that also.
Also, spokes should be assigned to zone-wise for
Zone-wise.
the departments. Yes, sir. It will be more helpful.
Okay, I think for postal Pranavji, aap hi hai. So postal Pranavji is here. So he's this whole contact point for the postal departments. So you can raise issues with him directly. In case you feel that there is a response is not there and you want to escalate it, you can share it with PFRD. I'll provide my email ID. You can note down if anyone wants to note down. Guneet.Anand, Guneet .Anand
It's okay.
@pfrda.org.in.
Okay, sir. Sir, another thing, it is confirmed that after the demise of both the subscriber and the spouse, so no amount will be settled from the corpus, right? It is
Yes.
confirmed, right?
Yes.
Whether it will be in
No,
the black.
suppose I'll take an example also. Suppose your individual corpus was 1 crore rupees
Right.
and before payout and everything, someone there is not your spouse died, then settlement will happen as per the law itself. That is your legal heirs will get. But before commencement of the payout, once you start receiving the payout and everything, then nothing will be given back. Once your corpus is transferred to the pool corpus, then it is transferred there
But
and
in
your
NPS, that 40% amount at least will be settled to the spouse, right, sir?
no 40% amount under NPS. What happens is that it is it depends on the type of annuity you have
Depends
taken.
on the, yes,
You have
depends
that
on the
option
annuity
of that
set,
annuity,
right.
but in that annuity the returns are far less compared to the other annuities. Suppose if another annuity without return of corpus is fetching you 8 or 9% annuity rate, here you will get 5 or 6%. So that 3% difference is also there. So that we will have to see.
Okay, sir. Thank you, sir.
Normally, a person superannuating at the age of 60. In the last year, he normally applies more leave, or it is generally seen, HPL or whatever it is. So what happens is that when you go for the last 12 months average emoluments, there is a probability that the corpus payout gets reduced. So if you can sweeten up the scheme, matching with OPS, that is a wish list, that will be beneficial.
We'll take up with concern, sir.
Sir, actually I had some doubts.
Yes.
Sir, in the case of resignation, there is an option to switch back to NPS. Suppose we do not take that option, means then the IC will be retained.
Yes.
Only that much. No?
Yes.
And sir, one more doubt. When we are switching from UPS to NPS, for the system will back calculate with 14% of the contribution.
Yes. Yes.
As of now, the 14% contribution by the government is tax free. It is exempted under income tax. So what will happen? Suppose I am taking this option after 30 years, then the backdated contribution of 14% will be huge. So will the entire amount be tax free?
It will be tax free because that contribution is being transferred from pool corpus to your NPS tier 1 account.
Okay.
So it is that amount, that corpus is being moved from one corpus to another corpus under the NPS architecture. And NPS trust 1012B or something, that section I'll have to see, we'll have to check. But NPS trust is exempt from these taxation for such cases. So that will be tax free only.
Okay. So because it is not like an individual amount, so it will be tax free.
That amount will not be given to you as a cash. That will be paid to you in your NPS account. So that's why it will be tax free.
So technically it will not be an employer contribution.
No, it will be an employer contribution only. An employer contribution is 14% already tax free is there, no, at present also.
Yes, sir. But it will be added to the taxable salary. So will that be also be added to the taxable salary for that year?
No, that salary part or accounting part will have to check once. But what I know is it will be transferred from pool corpus to your individual. That 4% along with growth will be transferred from pool corpus to your NPS tier 1 account. So it will be not be given to you as a cash or component of salary. It will be adjusted directly between the corpus.
So it will be tax free.
Yeah. You can be assured of that. Yes.
Okay, sir. So will the date be extended 30 September any chance?
That possibilities are less.
Okay, sir.
Sir,
Died in harness, family pension will be there, no? That same provision will be same
Yes.
for UPS also?
Yes. Same has been allowed. You can choose, but you'll have to exercise that option.
Okay, sir. In one of your slides, there was a mention that excess of IC over BC, so only up to 60% will be tax free.
Yes.
So the remaining will be taxed.
Remaining will be taxed as per the.
Sir, but for NPS, I think the entire corpus will be tax free, no?
Yeah, NPS also 60% that you take out is tax free, and 40% if you invest in the annuity, that is tax free. If you read the Income Tax Act, that 40% amount is tax free only because you are buying annuity. Suppose if that 40% was also supposed to be given you as a lump sum, then it would have been taxed.
Sir, one doubt. So suppose the excess of IC over BC means the entire BC, the amount equivalent to BC will be taken by the government to give us payout. So the excess of IC is actually our amount only, no?
Yes.
But in that amount also, after the 60% remaining will be taxed.
40% will be taxed.
But in NPS, the entire corpus, 60% we can take as lump sum. So that lump sum will not be taxed at all.
Here also you can take 60% as lump sum also of that.
And that is from the BC amount, no?
To
the equivalent of BC amount.
60% along with this. So it is same, sir. In case if you will go into calculation, the 60% of the individual corpus is same, or 60% of the benchmark corpus plus the excess 60%. That calculation comes out to be same. So it is same as it is there in NPS. The same benefit has been provided here.
Sir, but in NPS, all the whatever amount we are getting at the time of retirement, nothing is taxed.
No, 40% when you annuitize it. After that, you whatever annuity you receive.
That is only for annuity, no, sir. Here also
yes,
payout
that is why here it is being not given as an annuity. It is given as a cash. That is why it is being taxed.
No,
so
sir, this is
maybe
excess of IC, no.
Huh?
Here also payout will be there. The 60% is for excess of IC over BC. So the payout is still there. Payout is taxed.
See, access, that only I am telling. Access 60% is tax free. 40% you will have to bear tax on, and it has nothing to do with NPS, because in NPS also similar provisions are there. But only case is there that there 40% was not given to you as a cash. You will have to mandatorily purchase it for annuity. When that annuity ROP you get back, so that is taxed. So that is the case.
No, sir. Here, no, not that 40%. Here, what is happening? The BC will be taken for giving the payout, not the 40%. But here, the excess of entire IC, the excess of IC over BC means that is a amount that should not be taxed actually. But
That is more of a suggestion. So
okay, sir.
I got it. You want that 40% is cannot be taxed, but
yeah. So
that
to
is
maintain
out
that
of
parity with-
out
to
of our
maintain
domain.
the parity with the NBS, because in NBS the 40% that you mentioned, sir, is used for purchasing annuity. Here this 40% is not for annuity, but the BC is taken for annuity.
Yes,
I hope I.
Okay, next. Yes.
CRA portal, but with the NSCL guidelines, you are forwarding the document through the mail. Already sent the mail with 1 month completed, but not action from the NSCL side.
So Pranav ji, kindly look into that.
Your
issue.
guidelines last month you given your document all over forward, but not settle the issues. And another question, sir.
Yes.
1425, the UPS, who are the UPS option given the employee, the claim also forward into NSCL, but not received the 60%.
After 1/4, yes.
When will we start, sir?
Payouts?
Payouts?
See, the funds have come in the pool corpus, so payouts will start soon. This week or next week, most probably it should
Okay,
start.
many queries from the pensioners. You are the retired from April now, UPS pensioners. So
Yes, yes. It will start soon, sir, because the funds have now come, so it will start.
Sir, my question relates to past retirees. In DOPA, there are so many employees who have been just completed 10 years of service and retired in 11 or 12 like that service. So after their retirement in past, they have withdrawn 60% of the corpus from that NPS and 40% they have invested.
Yes, yes.
Now the pensioners are querying like that. What will happen with that 60% already they have taken amount?
Okay. So in case they have withdrawn, so they have option to give back that 60% along with interest, and they can get the full pension, that is whatever is applicable as per the UPS formula. As you were saying, 10 or 12 years. So it will be like 12 by 25, because 25 years minimum service is required to get 50% pension. So if 25 years is not there, then proportionately that amount reduces. So whatever the applicable pension, admissible payout they will be getting as per UPS formula, they will be eligible to get. Subject to that they return that 60% along with it. Suppose if they don't want to give back that 60%, then also they will be getting the 40, means whatever the pension they were supposed to get, 40% of that they will be getting still then. Means a top up amount will be given to them. They might have already be having some annuity, so whatever annuity they are getting, over and above that, they will get some top up amount. But if they want full pension, or whatever they were eligible to get, then they will have to give back that 60%. If they don't want full pension, they want a reduced pension, then they can without giving anything, they can get back.
But minimum basic pension is 10,000 in UPS. So below that also their pension.
If they don't choose to repay that 60%.
If they don't choose to repay that 60%,
then it may be less, because the minimum pension is subject to the condition that you have not taken any withdrawals, that is final withdrawal or partial withdrawal or anything. Your IC and BC are matching. So that is the only condition for the minimum pension. Number of years is not the condition there, but this is the condition. So they are in a better position to evaluate. Anyways, it will be beneficial for them. If not today, if suppose the calculation as they are getting more annuity. Suppose if they are getting 10,000 rupees annuity and pension as per UPS is coming 9,000 rupees at present, along with DR and everything. But in future, DR is supposed to grow, and DR will increase, then that will breach that 10,000 amount. So then they will start getting that top-up amount basically. So now no one is taking back annuity from them. Annuity continues as it is. They have that option to recoup that 60% to get the full pension, whatever they are eligible.
Sir, whether a retired official who retired after 1/4/2025 under NPS and whose NPS case is also settled, whether they can opt for UPS or not?
After 1/4.
1/4/2025.
They can opt for UPS till 30th.
Till
Yes, but they have chosen for annuity. Means they have applied.
yes, annuity is already settled and amount
And
is
that means they have exercised the option for NPS. So that's why they settled the annuity.
Yes.
So then in that case, they will not be eligible because they have already settled that annuity. No, they have already gone for NPS.
Okay, sir. And sir, we are facing some issues regarding PAN details and official retired before 1/1/2016. That DA rate is 0.
Okay.
Means,
okay. DA rate is 0. I think this issue was resolved. Resolved हो गया था ना ये तो दूसरा है. Okay, sir. So then you kindly mail it to me. I have given my ID, so I'll take.
Okay, sir.
Sir, I have rather a doubt than a question. Because many of, I am an earlier subscriber to NPS. From 2007, I am an active subscriber and I am watching everything, like I am switching to new schemes and everything. But when this UPS come, major of my colleagues are not willing to switch to UPS is under the consideration that our children does not get any direct benefit. Because after even for there are so many single parents are there, so their children will not get a good amount of benefit from UPS. That's a concern. Also, what even if the life expectancy is around 65, NPS is more better for us than UPS. So if that option is come that our children, I think up to now OPS unmarried children are unmarried or daughters are getting benefit.
24 days.
Yes, sir. That if that option is adopted to UPS, many of us is willing to switch to UPS than NPS. That because we are getting that 50% of our basic pay. That will be, I think, around 16 to 70% that scheme fund from nowheres. It must be 16 to 17 that we have to get that 15 range from UPS. So if that benefit is added to this NPS, more of us is willing to join UPS than NPS.
Sir, for this, what I can say, definitely we'll take up the issue with the concerned. It is for them then to decide what benefits should be extended or not. But at present, you have an option to switch back to NPS anytime in under the tenure of UPS. So if you don't opt for UPS, and suppose in future this kind of benefits they are being extended, then you will always you will lose out on those benefits.
Yes, sir.
So what I would suggest to you and those who are in these cases, that you opt for UPS. Anyway, you will be having that one-time switch facility. So you decide on a later date whether you want to be in UPS or NPS. At the time of retirement, when you are nearing your retirement, you decide then, so that you don't lose out on these also. You have both the eggs in the basket, basically.
Sir, I have one doubt on that also, because now we are getting 14% government distribution from employees distribution 40. Now it will be reduced to 10%.
Yes.
So that 4% value is huge impact when it is come.
Yeah, but when you migrate back to UPS using that switch facility, that 4% and growth, everything will be given to you.
Oh,
so no need to
everything, that difference,
yes, that difference from the back date, it will be given to you. So basically you are in NPS only, means you will come back to NPS with all the accrued benefits in the NPS. I think
for which, what will be the benchmark? The scheme I have chosen, or
the default scheme,
scheme,
wherein 25% of your corpus is invested in equity.
Okay, thanks.
Any more questions?
40% transfer to the pool corpus from the ASP?
No. Annuities under NPS is different. Here, the annuity service provider has no role in providing the pension. Here, the pension is being provided by the Government of India through the pool corpus. Whereas in NPS, it was the private players or PSUs, the companies, the annuity service provider, life insurance companies, they were providing the pension. So both has a significant, both the schemes are different.
Suppose in B2 case, the subscriber is already getting annuity from the ASP and the monthly top-up from the government from the pool corpus.
Yes.
When the subscriber dies, the 40% is not returned to the spouse.
No, it will be whatever annuity type you have taken, it will be returned. If you have taken a choice annuity type where it is to be returned to the spouse, it will be returned to the spouse, no issues.
Hi, the annuity, that's what actually I asked her, that 40% will be returned to the spouse in case the subscriber dies.
Yes.
Though he is in your UPS.
Yes, for past retirees that is the scheme.
Past
Yes.
retirees.
Yes.
So 40% is returned back to the spouse.
If that option is there, then yes.
Return of purchase price.
Yes.
If it is selected, the amount will be returned
Yes.
from the ASP.
Yes.
And only the monthly top-up amount will be
Given to the spouse, yes.
That's all.
Yes.
Thank you, sir.
Sir, one doubt. When we are transferring the NPS corpus to IC, suppose I am an NPS subscriber now, so I am selecting UPS. So my entire NPS corpus will be transferred to the IC. So I think this will also include the 14% government contribution also, no?
Yes, that will include.
So not the 10%.
No, that whatever your corpus that was due to your central government services, whether 10%, 14%. 14% came into play in 2019. Before that it was 10% only.
Okay.
So whatever your corpus that is due to your central government services, that will be transferred to IC.
So entire amount will be transferred. Yes. Sir, one more doubt, sir. The IC by BC ratio is there, no? So always the payout is given based on the ratio between IC by BC. How
Yes.
the IC have performed compared to the BC. So actually what will decide the performance of BC?
BC is a default pattern, the 25% equity scheme that we are having, that is the default scheme. So whatever the default scheme is performing, that is the return of the BC, and whatever the scheme you choose, if you choose to remain in the default scheme itself and you don't withdraw, then your ICBC will always be equal.
Is there a chance my IC will be lesser than BC? Suppose
There might be a chance if you make partial withdrawal,
no,
or if
without
you
partial withdrawal, sir.
then it might be a case that whatever scheme or pension fund you have chosen, if you have not in the default scheme, and if you have chosen another scheme, and if that scheme has not performed well, then there may be a chance.
So it will still be based on the market conditions.
Yes,
only.
that will be if you decide to choose that option. Otherwise, you stay in default option, no issues.
Okay, sir. And sir, family payout will have DR as well, no?
Yes.
Thank you, sir.
NPS to UPS, we have noted in the statement of transactions that certain amount was not migrated to UPS completely, sir. Actually, in all the cases, actually we have noted that from November 2022, that particular amount in Tamil Nadu circle, for all the subscribers, that was not completely migrated from NPS to UPS. That amount standalone in the SOT
That amount
itself,
is due
sir.
to the central government service, or it is
Central
a
government
voluntary
service only,
contribution?
not only for one subscriber,
Okay.
sir, for all the subscribers migrated from NPS to UPS.
Okay, ma'am, I
Actually,
request.
we have raised so many technical clarifications with the CRA. We didn't receive anything from the
Ma'am,
end.
whatever you have not received, kindly mail it to me.
But
We
these
will
are
look
all,
into
actually,
it.
these are all mandatory things. That's why I
Yes,
have
yes,
raised
yes.
this.
You kindly escalate it to
please,
us.
one thing, and the next thing, frozen. The frozen status raises only when the subscriber didn't receive that 40% annuity amount also.
Yes.
So, okay, the 40% lies with the NSDL itself.
Yes.
NSDL,
In the
NPS
system,
Trust
yes.
itself. So, what are you going to do to settle those cases? Actually, we are having so many cases with the frozen status, sir. So, each and every
Okay, so
time we are raising
basically
that.
those who have not taken the annuity,
Taken
but they
the
have taken
annuity.
the lump sum, the
Yes,
60% they have taken, but annuity they have not taken.
60% amount was withdrawn. The 40% lies with the NSD.
Madam,
the
what
NPS
you can,
Trust
in
itself.
that cases, at present it is like that, for past retiree, they will have to take the annuity, because on that annuity only,
Yes,
the
yes,
top
yes.
up will be calculated.
Yes, it is mandate,
So-
but that subscribers are now opted for UPS also.
So yes, that is okay. You ask them to start NPS annuity, and whatever the calculation will be there.
First, we have to ask them to go for annuity.
That they are retired before 31st March?
Yes, retired
So
before
then
31/3.
you ask them to go for the annuity. It is beneficial for them only. They can go for the return of purchase price annuity, and they can get UPS benefit both. So for them it is win-win only. So you ask them to start the annuity, and after that they have started the annuity, then you will be able to migrate them to the UPS by.
Yes, only after that only we can migrate
Yes,
into
yes. At present, that is the for
But it
past
is a
retirees it
cumbersome
is that.
procedure, right? It is a cumbersome procedure, right?
Yes, for annuity, for them you will have to
past
start. the
retirees, they didn't know about which annuity service providers they have selected for. We couldn't trace at this distant date, right?
Okay. Ma'am, I think we have shared the data of the past retirees with Department of Post. If not, we will again ask.
Sir, we are having that past retirees data, sir, but we are don't having the data for which annuity service provider they have selected
so that is not an issue, ma'am. That the calculations will be done automatically in the system. So that is not an issue. Let them select whatever they want. You just ask them. You have to take the annuity, so as to start the monthly top-up amount for under UPS.
So after settlement of those NPS annuity, after opting for the annuity only, we can settle the cases under UPS.
Yes. So again, I will clarify. It is only for the past retirees, 31st March, before 31st March. Because in case if someone who is retiring post 1st April, and if they go for annuity, then they will be in NPS only.
Yes,
so that please take care of that. Okay, so I think last question we'll take from sir, and then we'll conclude the session.
Sir, if past retirees wants to, if past retirees opts to UPS, he wants to replenish the lump sum withdrawal to make to receive the assured payout. Is there any provision to make adjustment by replenishment with a lump sum payment?
You can give that whatever the amount you have withdrawn, up to 60% of that amount you can pay back in the in the system, and you can get the full assured payout.
No, sir. My question is,
you want to exhaust it with the lump sum payment that you will get, and at present that provision is not there. At present, that provision is not.
Provision is not there.
At present, it is not there. Okay, so we'll conclude, and after this we'll be having CRA session. That will be a technical session. So there also you can raise all your queries, especially that were technical in nature. So Mr. Pranav will be there to answer you there. Thank you. Thank you, everyone.
We have discussed the policy and the vision behind the unified pension scheme. Now we must turn to the operational and technical aspects. The central recording agency operated by Protean is the official entity responsible for maintaining all records, processing every transactions under the NPS and now the UPS. Their expertise is crucial to ensuring a smooth experience for all our subscribers. Now it's my pleasure to invite Sri Pranav Kapadia, Assistant Manager from CRA Protean. He will provide a comprehensive technical walkthrough of about the UPS, detailing the online and offline process, required forms, and all essential functionalities that are critical for every employee. Please join in giving a warm welcome to Sri Pranav Kapadia, Assistant Manager from CRA. We welcome you, sir.
Hello. Thank you once again. Good afternoon, all the dignitaries and the participants, all the office members. And without any further delay, I understand that the policy plus the agenda behind the policy, the framework, the regulation part, everything was well explained by Mr. Guneet. Now we would be coming from the perspective, how the policy would impact, So how the policy will impact on practical grounds. So we have presented few illustrations for easy understanding, because I understand that OM, the Gazette, is more of technical in nature, and the queries coming in from the subscriber will be from a practical approach. So before going to that particular illustrations, the main concern that how the IC and BC will operate and what will be the effects of IC if it is more, if it is less. So as it was already explained, I won't take much of time, it will be just a refresher part. So when we say IC and BC is equal, which means that the individual is entitled and eligible to receive full pension. Now when I say full pension, it means the percentage which was decided by the length of the service. So as the guidelines says, if it is 25 years or more, the entitlement is 50%, or if it is less, then 25 years, it will be on pro rata basis. And if it is minimum 10 years, it is going to be 10,000 at least. So that particular percentage which was decided, now we'll see whether that percentage is going to be fulfilled on full grounds or there will be a shortfall, depending on the nature of and the calculation value of your IC and BC. So when we say IC and BC is full, which means individual corpus in the statement which is given and the tentative mirror amount or the mirror image of your benchmark corpus, when that are equal, the individual is entitled to receive full pension. Now when we say the IC, if the IC is less, okay, like there were instances if the individual have exercised partial withdrawal, okay, if there were any missing contributions in the journey of NPS which impacted the less of IC, or probably your own fund manager did not perform well as per the market expected standards, then in that case the IC might be late. So in that case, when the IC is less than the BC, the individual might be entitled to receive shortfall in the pension amount. Okay, and the third proactive approach, that IC is going to be more. So when the IC is more than the benchmark value, it means that the additional, the positive differential amount more than the benchmark will be given in lump sum format, and then the individual or the subscriber will be entitled to receive full pension. Okay, now continuing this particular talk, we have illustrations which will be explaining ahead. Now, to understand how the lump sum payment would work, with the given formulas, we have created an illustration where a subscriber retires with a 30 year of service, okay, which means 360 months, considering 12 months in a year, and the basic was 45,000. We have considered DA value as 53%, so the total value comes, as per the total emoluments which is required, comes to 68,850 rupees. Now when that total emoluments is derived into the formula, the one-time lump sum benefit for that particular subscriber completing 30 years of service with a basic pay of 45,000 will be entitled to receive 4,13,100 rupees as a lump sum benefit, as a lump sum one-time benefit during the superannuation time. Now, point to note here, if the subscriber does not qualify, he or she is not eligible to receive this lump sum benefit. So when we say 10 years is mandatory, or 10 years is a positive note for an individual to complete, he or she will be eligible to receive lump sum benefit plus at least minimum of 10,000 as a pension amount. More service, definitely it's a good note, it's a good sign, but considering 10 years or more, or minimum at least 10 years, he or she will be eligible to receive lump sum benefit with a minimum pension of at least 10,000 rupees. Now continuing the same examples of basic and DA, we have additional different illustrations how the entire UPS as a framework or as a policy on individual case to case, it will have an impact. Next. Scenario 1. Now here we talk when the individual has completed full service. So proper 25 years or more service is given. So 300 months, and now because the length of service is completed as a full, the IC and BC has reached to the value of 50 lakh. So where IC and BC both are equal, now there is no difference in IC and BC. It is properly matching as per the given understanding. With the given formula that 50% of 12 months average basic. So when we calculate 45,000 50%, the amount comes to 22,500 and the DR value. Now DR is going to be not defined as of now, because it is going to be a percentage in nature, and the percentage would change as per the decision makers, the authorities do the revision in that particular rates. So when an individual in scenario 1 completes full year, full service, having IC and BC of equal amount, he or she will be entitled to receive 22,500 plus a separate DR value. Next scenario. Here we talk about the partial service. Now individual, instead of going for full services, he or she opted for partial services, which were 15 years. Now because the service is less, the corpus is less. But having said that, the corpus is still equal. IC and BC is still equal, 30 lakhs. So with the same formula, now due to the less length of the service, the amount comes to 13,500 plus the DR value. If it would be a full service, the amount have been 22,500 plus the DR value. Partial service, so pro rata basis. Next, to the third scenario, minimum guaranteed pension. Now, when we consider a service period of 10 years, 120 months. Now, in this case, again, IC and BC is equal, coming to 25 lakhs,
with the same derived formula, the calculation says the amount is 9,000 rupees. But as per the Gazette, as per the rules, as per the OM given, that at least if an individual is completing or qualifying 10 years of service, 10,000 will be the minimum pension. So in this case, additional 1,000 will be as a top-up facility and the DR value, which is going to be, additional to the ongoing services. So this is when we talk about the three scenarios in case of full service, partial service, and minimum service. Now we move ahead for the next scenario. Reduced pension in case of missing contributions. Now what will the contributions which were not accomplished, which were not received, or which were delayed or went missing in your NPS journey, what would that have an impact in your UPS? Now if there was a missing contribution in your NPS journey, definitely the IC will have an impact. Okay. See, the length of the service is full, proper 25 years of service is given. Unfortunately, the IC is less because the contributions went missing. So the IC value comes to 45 lakhs. The benchmark which runs in the default pattern, again it is calculated by the system itself. So it will consider a length of 25 years of service itself. So the corpus at BC goes to 50 lakhs, individual goes to 45 lakhs. Now again there is a shortfall. Despite giving full service, because of NPS contributions missed during the NPS journey, that have an impact in UPS. So instead of receiving 22,500, individual is able to receive 20,250. So this is the impact, that an individual will have in their value proposition at the IC level if the contributions go missing in NPS. Next, fifth scenario. What will be an impact if any individual or any subscriber exercised partial withdrawal, in the NPS account? As everybody is aware that partial withdrawal is eligible for an individual, 3 times in the journey of NPS plus 25% of own contribution. So if any individual or any subscriber exercise that partial withdrawal, what is the impact under UPS? Again, similar, calculations, because it is the partial withdrawal impacting your own contribution, same the IC will have an impact in UPS. Now when we see, again full length of service is 300 months, considering 25 years of service. IC 40 lakhs, benchmark, again system driven mirror amount 50 lakhs. Now because of the partial withdrawal exercised, the total eligible pension comes to 18,000 with the DR value. Either earlier in the case which we saw, in the case 1, scenario 1, full service IC equal to BC, eligible amount was 22,500 and the DR value. Now because of the partial withdrawal done in the NPS account, the IC has come down, impacting the pension value, coming to 18,000 plus the DR value. So this is the fifth scenario. Next, sixth scenario. Here we talk how the individual is eligible to receive more pension. Or in scenarios when IC is more, what is the exercise to be done? Now, if the service of the length of the service of an individual is again proper, full service 25 years, 300 months, IC, because of the financial literacy, change of the fund manager, change of the scheme, doing some additional contributions from one side, basis which the IC is additional, IC is on a positive note than the benchmark value. So IC is 55 lakhs, benchmark remains at 50 lakhs. Now what will happen? So the positive differential value of 5 lakhs, which is more than the benchmark value, that will be given to the individual in one go, lump sum payment. This is going to be over and above the other lump sum payment which we spoke. So this is going to be addition to the value which is going to be given by the system. This is because of the own, proactiveness of the subscriber, where IC is more. So subscriber will be eligible to receive additional positive difference more than the benchmark value in lump sum format. And then when the IC and BC is equal, he or she will be receiving full pension. So this is the sixth scenario, where IC is more, so lump sum benefit receives the subscriber's bank account, and then full pension with the DR value. Next, now what happens if the IC is less? Definitely two possibilities, two things. One, the subscriber will be opting for a lesser or reduced pension if he or she is not willing to cope up the IC value. And in second scenario we discussed where IC is less, now coming at the retirement or the superannuation time, individual would have other investments also which would be maturing at the age of 60. So probably individual might recoup some funds from the other investments which got matured into the IC to enhance the IC value. Now when the IC value is announced, the more pension, or I would say a slight rise in the pension will be seen because there was enhancement in the IC value. So with the example that we saw earlier, 45 lakhs was the IC value, the subscriber recouped 2,50,000. Now the revised IC is 47,50,000. So the entitled amount that the subscriber is eligible to get on superannuation is 21,375 plus the DR value. So there is a slight increase because of the additional investment done in the IC value. So like sir also said previously that the individual should not wait for the last minute to evaluate the IC and BC, but on regular basis, or keep a habit to monitor and control your account, to keep a habit to revisit your account at least once in a month, which will give you a basic insight that are you at par with benchmark, are you shortfalling, are you going ahead of the benchmark value. So these are the intentions, explanations for IC, BC, full length of service, missing contributions, partial withdrawal. Next, now we see, again this is just the same information which was already given, so we can skip that. Next. Yeah. Now coming to the focus point, probably the more highlighted and concerns by the offices. So we have identified few of the ongoing regular issues or concerns, I would rather say, from the office in case of executing the payout options, unified pension payout options. So these are highlighted, and the reason for those rejections are given by NPS Trust, because everybody is aware that the final authority of taking any financial decision of accepting the amount or releasing the amount is by the NPS Trust. So they have given and identified few of the activities which are to be made a note by the task holders. First commonly identified is joint account details are missing in case of married subscribers. Subscriber might have informed in the service records but not updated in the CRA records. Now because of that there is a name mismatch, because of which the penny drop is having a challenge because of the joint holder missing account information. So kindly inform all the subscribers that if at all there are certain cases, there are certain conditions, do not forget to miss and update your nominee details. Why nominee details? Because they are somewhere or the other the joint holder in the bank channel itself. High possibility that nominee might be same and should be same, but very rare scenarios where the nominee might be different in the service records or probably in the CRA. And the third possibility where the nominee might be different as a joint holder. So everything needs to be in sync. This is purely to safeguard the financial interest of the subscriber. Next, DA value. Again, commonly identified that the offices are entering the percentage instead of amount. So whenever the request is coming in the system, kindly inform the subscribers or the office or your supporting DDOs or whoever is the task holder taking care of this request to enter the amount and not the percentage. Because percentage algorithm will be different at the back end, and when the amount comes, the field character matches and the request is taken ahead. Third is the KYC document missing information. Now KYC purely gives an information that your identity is perfect as per your service records, as per the form given in the system, and as per your actual holding KYC details or the identity proofs. If there is any change of information, if there is any address change, or if there is any missing information, because system might have a particular information. Now if any request is coming in offline, high possibility, as a human tendency, individuals do not have the habit to give proper PIN code, postal address information. They do not give proper landmark, which is actually given in the KYC records. They fail to miss on giving any landmark. They fail to give information with reference to any kind of name of the street or road. They just mention XYZ building, XYZ flat number, the station name and the city name. So missing information is also one of the challenge or one of the reason why NPS Trust is rejecting the request. So inform the subscribers, educate, aware the subscribers that kindly ensure the details given in your KYC are same replicating in the form. It is basically to just aware them, so the request is streamlined and request goes through all the phases, all the checkpoints in one go. Failing which, the task will again come at your level. You would be again given the same activity to be done. So if the information is streamlined at the subscriber level, definitely there won't be any repetition of the same activity that you already did once. Fourth information, employment details is inadequate. Now, the irrelevant documents which have been uploaded, like I can see madam smiling, so I'm sure that she has gone through certain experiences. So definitely, these are the points of concern. And if you are working on these concerns and informing the subscribers, definitely your life and your efforts will be taken in one activity, in one go basically. You don't have to wait for the system approvals. You do not have to give any additional approving authorities confirmation or recommendation and letter and everything. So at the end, these are few concerns given by the NPS Trust to streamline that the errors are less or the errors are reduced, because subscribers are, more importantly, they are not aware. I am sure that subscribers would be directly coming to you and telling you, madam, you decide, or sir, you decide which is the best option for me. So people might not nod or agree, but things are happening at that way. Next, service data discrepancy. Now, qualifying service date before the joining date. Now there are possibilities when the appointment letter is given a particular date, but within the date of joining and the appointment letter there is a transfer order. So instead of the subscriber joining in A office, he or she is transferred to B office and the date changes because of the transition impact. Bank account mismatch, yes. Like I said, joint holder is also having one of the key impact in your differences in your bank account. KYC documents, cancel check, the check which is given is cancelled but is not properly scanned. The image is blurred. So in those cases, because it is going to be a financial impact to the subscriber, and like even Mr. Gunit highlighted that, right now the ownership is of the task holder, because everything is routed through your official login IDs where your Aadhars are also mapped. So individuals facing any financial loss, if any delay is happening or if any wrong information, it is easy to identify the person who is the task holder. So all that's what we are discussing is basically, impacting to smoothen your life. Next we have unclear incomplete documents. Yes, like I said, that documents are merged. They are crossing the eligible space limit or the size of the document to be given, wrong format, incomplete information given, specimen sign is not proper as per the given signatures in the KYC document in the service records. So all these are basically highlighted by the NPS Trust, because even they do not want any request pending at their level. Even they want to clear and start the benefits on prior basis. And like sir said, the pool is already formed. Now gradually you will see a smooth outflow of all the payouts happening. But subject to these criteria are taken care, there is no discrepancy or on these information. Next. How to opt? Yes, we already discussed. Next. Process flow. Yes, this is an important part. So the process flow in all the three scenarios will be the same. In case of registration, in case of migration, and in case of the withdrawals. First is going to be by the subscriber, which is do it yourself. So you can inform the subscriber that you can also initiate the request from your side and give the acknowledgement ID to the supporting DDO. Then the request gets verified at the DDO level, comes at the PO level, and post the authorization, it will come in the CRA queue. So the process flow remains same, like I said, in all the three scenarios: registration, migration, and the withdrawal part. Next. Now here we will see how the subscriber can directly migrate by themselves. Okay, I am sure that you would be receiving some request, through offline basis that individual have given the form, how should we do it? But like I said that, once the form comes in your hand, it is the responsibility of the office to go through the proper checks, which you already discussed. So to avoid that, you can inform the subscriber that, they can directly, initiate the request by themselves. The method is visiting the eNPS website. Under the Unified Pension Scheme tab, there is a second menu which says NPS to UPS migration. Once the individual will click that, it will take you to the next page where the individual will enter the existing PRAN number with the DOB details. Select the mode of communication for receiving the OTP. Once the OTP is received, next, the individual have to give the details which the OTP which has come. So once the OTP is entered and the next screen comes that proceed for e-signing. Now because the data is already pre-filled by the NPS details, name, PRAN number, everything is already highlighted, already is pre-filled. So the individual just have to enter the Aadhaar linked or VID number for e-signing facility. You'll enter the Aadhaar number, receive the OTP, enter the OTP, next, here. At this screen, the subscriber has successfully initiated the migration request. Until unless this screen doesn't come, subscriber may claim that I have given the request, and you might struggle to fetch the request or identify where the request is gone, but the request is not properly submitted. So until unless this screen doesn't come, the acknowledgement ID doesn't come, you may inform the subscriber to take a printout or take a photo and make a note of the acknowledgement ID. Once this screen comes, it will come in the office queue to verify the request. So this is what with reference to the online migration. Now this we have replicated the screen of the subscriber. I am sure everybody would have logged in the system.
Excuse me. Now, Director DFS is in a hurry to leave, so we want to present him a memento. So I request Srimati Preeta Mohan, Senior AO from DAP, Kerala Circle, to present the memento to Sri Surjit Karthikeyan, Director DFS. I welcome you, sir.
See, I have a financial inclusion campaign in one of the Indian overseas. Your option either for OPS or UPS, you have to fill a form and give. But suppose if something happens during your service, then either you can opt for OPS or UPS. So that option you have to fill and give. Secondly, after marriage, you have to update your nominee details. Usually in NPS, people doesn't do, so due to that, so many issues happen. Then this NPS, UPS and all those things, you just spend some time on the retirement planning, everything, because personal needs we usually doesn't focus. So I request everybody to explore that and try to, other than default option also, you should try to explore, because equity gives good returns. So UPS you will get high returns, and that is tax free also 60%. Then UPS rules, NPS rules, if kindly go through what is the retirement provision, everything. And try to connect with the past retirees. And this lump sum payment is not in OPS. Even in OPS, that 6 months, every completed 6 months, it is not in OPS. It is in UPS. So that is one of the advantage compared to OPS. Then this much only, so I thought thank you.
Thank you, sir, for joining us all the way around from Delhi. And he has been always there in every seminar, workshop he has been present. We really thank you, sir. Sarkar, felicitation. Sir.
Thank you.
Thank you, sir.
Sorry for the interruption. Handing over the session to sir.
So, we continue, and good points that, DFS sir has again, emphasized to self-evaluate your choices. Do not be under any influence, try to read around through some financial awareness, financial literacy. More importantly, the option form, like sir said, that, if people who have not opted and given any choices or made any choices in NPS, kindly do it on priority, because that is going to be a savior as a concern in case of the absenteeism of the subscriber. Now, moving ahead. So, like I was saying that, this is the screen representative of the subscriber login when he or she is willing to, initiate the request online by him or herself. So, subscriber will log in the system, migrate to UPS and initiate the request. Next. Yes, the first option of initiating the request, and once he clicks, he will be routed through the eNPS website. Next. Now here we will see a format of the A2 form where the subscriber fills the form, gives it to the office for doing it offline purpose. Now the individual is expected to go through the form, because once any financial document is filled and given, it is basically a condition, undertaking and a clearance given that he or she has opted for a particular choice. So there are cases where even in case of option form, who subscribers have already filled, they are unaware of what they have filled. So it shouldn't be the case, because in case of the absenteeism, the nominee has to go through all the things basically post the subscriber does not exist. So subscriber should be aware of what he or she is filling. Also the same information should be aware at the nominee level. Moving ahead, with reference to the form which we saw, the subscriber will, the previous screen, subscriber will fill the form, give to the office, and then office will do the request initiation by the DDO ID. Next. Now we will see the options at the new registration. I am sure new recruits would have been happening, in all the circles. So for them, like the Gazette says, it is 30 days from the date of joining. So if the individual is opted, then definitely it's a good call. If the timeline is still pending, he or she has 30 days, time to decide whether NPS or UPS. So if the individual goes for UPS, then we'll see the option. Visiting the same link of eNPS, now instead of clicking on migration option, he or she will click on the initiation request. Next, after initiating, the screen will throw him at the option under the government domain. Now when the individual opts for government subscriber opting for UPS. So if the individual does not go with the right option, this opting for UPS tab will be missing, which means that the individual will automatically get registered and enroll in NPS request. So the individual should be aware by going with the label name of opting for UPS under government subscribers. He or she will click that particular option, start filling or initiating the request. Enter the DOB, PAN number, mobile number, email ID, next, and begin the registration. The basic details which will be fetched by the central KYC information, OTP for verification, and acknowledgement ID is generated. Now, again here point to note, most of the subscribers feels that the request is submitted at this level because they see the acknowledgement ID generated. And they turn off the system, they log off or they log out or XYZ. Now this is not the stage where the request is completed. This is the stage where request has started. It is the beginning of the request. And why acknowledgement ID is given in the beginning? Because if there are any errors, if there are any incorrect information, to trace it out, to do a rectification, the office will trace this information through the acknowledgement ID. So once this is done, the core details, the basic details will start coming in. The gender selection, suffix information, scheme selection, like there is an option, instead of going with the default scheme, individual has opted with actively LC50, LC25, scheme G, all the options are given at the subscriber level. So scheme information will be selected. Next, bank details, again here more importantly. Name in KYC, name in CRA, and name in service records should be same. Pranav Kapadia, Pranav K, P Kapadia. Person is same, but identity is 3 different people. So this will be a error throwing information. So whatever is the name, chronology, your first name, middle name, last name, or last name, middle name, first name, ensure it is the same across all the documents. So you enter the name details in the bank also, do the FATCA declaration, which means that you are an Indian citizen paying Indian taxes. Next, personal details with the nominee details, mandatory document to be uploaded. Appointment letter is possible to be uploaded because there are stages in which the banking, in which the central government employees, goes through certain checks, verifications, where the employee ID is delayed by certain number of days for coming in the system. So to avoid any financial delays, even the appointment letter is accepted by the information, by the system. So the individual need not wait for the employee ID to come. On the basis of appointment letter also, the individual can initiate the request. Now, post that, again coming to the same screen information where the individual have to enter the Aadhaar linked mobile number, receive the OTP, and post OTP is submitted. The stage and the screen says UPS request is complete. Now this is the screen which actually says that the entire journey of registration has completed. Until and unless this screen of completion doesn't come, the request is not properly completed. So the office will struggle. Subscriber will keep emphasizing, I have submitted the request, I have submitted, but you won't receive anything in your login system. Because subscriber actually turned off the system when the ACK ID was generated in the beginning of the request. So this is the information at the registration process which completes, and then the acknowledgement ID is given at the DDO level. Next. Now, more importantly, at the office level, what is expected out of the DDO, what is expected out of the PO in case of UPS. Everybody is aware about this login screen, the CRA login screen. Okay. Now when we are seeing the option of shifting with reference to the DDO, so DDO will log in with their user ID, CGV followed by alphanumeric combination ending with 0 as a user ID. And if you remove the 0, that is going to be the registration number. So I hope everybody is aware about the DDO credentials and everybody individual is Aadhaar mapped in the system. Next. So in the login, I am sure everybody is logged in at the DDO level and you are aware about the familiar options given. So under Unified Pension, migration option, you click that particular option. Next. So requests which are already initiated or which are already pending will be screened in the status bar. Now to take any action, you have to click on accept or reject. Once you click, the pre-filled information which was given by the initiator will be shown at your level. Next. So individual have to go through all these particular, as a verification approach. As a verification approach, individual have to go through all the checks given by the subscriber. If at all there is a discrepancy, reject the request. Okay, so the subscriber will be given a second chance to reinitiate the request. So going through all the screens information. Next, seeing all the checks, personal details, bank details, nomination details, scheme details. You go with next, backpack. So if all the checks are properly completed, if all the checks are properly verified by the DDO, the request is then accepted, which goes from the DDO queue to the PO queue. Now next we will see the screens at the PO level, verification at the PO level. Same login screen, but user ID will be of the PO office, starting with 100, ending with 00 or 01. Again, under UPS option, migrate to UPS, click next. Status bar is shown that the request is initiated by the DDO. Accept, reject, click. You start all the stages for doing the verification and then the authorization. So individual, if there are any points which were probably missed at the DDO level, the PO have to be 100% sure at the verification level, and more importantly at the authorization level. Because if any wrong information is authorized by the PO, then the entire correction approach will again come in your own queue. So to avoid any rework, to avoid any duplication of all the activities, kindly ensure that all the details entered by the subscriber or by the DDO in case of initiation request at the DDO level, things are properly entered. Like I said that, in some addresses there are brackets, in some cases there are special characters. So kindly ensure all those checkpoints are properly verified and then authorized. So we see these options. Next, individual, if accepts, it is okay, it is done, the request is completed. Now, the reason for rejection to be given is mandatory. The purpose of giving the rejection reason is mandatory so that when the request goes back at the initiator level, the individual does not repeat the same mistake again. So we see the verification, accept, yes, no, next. Did you, yes, next. Correction, you get a second attempt of proceed, yes, no, because this is going to be your final yes or no. Next. Here you get that the request has been with your 00 or 01, whichever ID you are using for verification purpose. The request is properly verified. Now it is pending at the authorizer ID. Either it could be 00 or it could be 01. Vice versa of what you utilized for verification purpose. So next, at the authorizer level, again the PO will log in with another user ID and go through the same checks. So this is the information which wanted to highlight for the subscribers, and more importantly at the office level, to avoid any errors, to avoid any duplication and rework at your level. And more importantly, the agenda of spreading awareness at the subscriber level with reference to the benefits, the choices to be made, the forms to be given, certain actions which the subscriber themselves can do it. So this was with reference to the CRA on operational and the technical approach. Now probably if we have any questions pertaining to the stages of request initiation or any particular approach, we can take the Q&A. Yes. So right now, as per the guidelines given, the modification, category under UPS is not yet permitted as of now. So we are awaiting clearance and approvals from the authorities that even certain information in UPS for the subscribers should be allowed for modification purposes. And like we said that in certain cases, because of name mismatch and certain things which are a roadblock, we are accepting official request from the PRO user ID, which was already discussed and highlighted by Mr. Guneet. But again, we are working on that, for smoothening the request, because right now, like sir said, the pool is formed. Gradually, we will see the payouts happening. So cases which were getting a roadblock might see some impact, where modifications might come in system, where the approvals that would come from the PRO office to the CRA will be taken clearance from the NPS trust, and the process would go ahead. That's right. Yes, yes. You are right, madam. So we are again awaiting certain clarifications and guidelines. Absolutely, absolutely, yes, for modification purpose. Right. Right, right. No, guidelines from our own side, not from the regulator side. Guidelines from the technical, our CRA backend team basically. Right. No. Yes. No, this feedback is definitely taken by other circles and also given by the regulator, which is definitely taken up by the CRA's internal higher authority for technical improvements. So I guess, firstly, I believe, certain doubts from the technical side are still under review at CRA level. Certain guidelines which are already given are being worked, for more enhancement, as the feedback also given, certain wish list is also given. So things will gradually fall in place. But Having said that, not to miss on the 30th September deadline. If you opt, there is always a possibility to come back to NPS, but if you miss on the deadline, later it would be a repenting situation where you wouldn't be getting an option to go back to UPS. So having said that, thank you once again for, patiently listening, and thank you once again for the senior authorities for giving the CRA as an opportunity to be present in this forum. Thank you.
This gives us an issue. If it is offline applications, what we receive at
Right,
PAO,
right.
penny drop for 3 accounts per day is insufficient, sir.
No.
Together, sir.
Total.
Together. Yes, sir.
We will make a note, definitely.
Yes, sir. Yes, sir.
Sure.
Thank you, sir.
Yeah. Okay, so this is a new, variation basically. So even we would have to look into it.